Mr. Chair, it looks like we are ready to go when you are. Thank you.
Okay, we're ready. Good morning, everybody. This is the time and place for the Nevada Tax Commission meeting. Today is April 21st, 2023. The time is 10:02 a.m. Tina, could you call roll, please?
Yes. Commissioner Lippman.
Present.
Commissioner Bursey.
Here.
Commissioner Rotifer.
Here.
Commissioner Brown. Commissioner Brown. Commissioner Johnson.
Here.
Commissioner Byram.
Here.
Commissioner Witt.
Here.
And I do see Commissioner Brown on.
Can you hear me now?
Yes. Thank you. And Chairman Wren.
I'm here. Thank you very much.
Thank you.
Okay, first thing on the agenda, of course, is public comment. Do we have any public comment in Carson City?
Yes. Yes, thank you. This is Josh Hicks with McDonald Chrono for the record. I guess more of a question than a comment. I know there's a lot of regulations and recommendations to go through today. I know I had comments on some of them, but certainly not all of them. And I just was curious, will we be taking comment as we go, or should we do that all right now?
No, let's take it as the items come up. That'd be okay.
Thank you. That's perfect. Appreciate it.
Okay.
We may have public comment on Zoom. If you would like to provide public comment, please raise your hand or star 9 be put into the queue. And I don't see any public comment on Zoom.
Okay, is there any public comment in Las Vegas?
Oh, do we have Vegas? Just one moment.
Okay.
Go, George. Thank you. Thank you.
I hear you, baby.
Las Vegas, do you have any public comment? Just one moment. We're trying to get the connection with Las Vegas.
That's fine. Yeah, I don't see them.
They are on.
There's a lot of rustling of papers and it's hard for
Yeah, I can't hear anything.
The paper rustling with these speakers. It goes right through them. So
Yeah, each one's like right next to you.
We are.
Yeah, we don't have any public comment down here.
thank you, Guy.
Okay, thank you very much. I can't see my little screen. Is Shelley there?
Good morning, Mr. Chair. Shelley is not able to make it today. Excuse me, Director Hughes is not able to make it today. She's taking care of other matters for the legislature and otherwise. But she's asked me as Chief Deputy to go ahead and take agenda item number 2, if you're comfortable with that.
Absolutely. Go right ahead, please.
Terrific, thank you. Actually, it's agenda item 3, I misspoke. This is the agenda item to consider the Governor's Executive Order 2023-003, requiring executive branch boards to freeze the issuance of new regulations, conduct a comprehensive review of existing regulations, and prepare a report to the governor's office by May 1st, 2023, recommending at least 10 regulations for removal and any other regulations that can be streamlined, clarified, reduced, or otherwise improved. For the record, Mr. Chair, I'm Yvonne Navarez-Goodson, Chief Deputy for the department. And today, today's special meeting of the Nevada Tax Commission provides the public hearing of the Nevada Tax Commission to determine its recommendation to Governor Lombardo under this executive order. You've received several materials before you this morning, and I thought what I could do is provide a roadmap for how I would recommend the commission look at these regulations and discuss these regulations today. So with respect to lists 1 and 2, you've received 3 lists in your materials. Lists 1 and 2 provide an overview of the regulations that have been recommended for both repeal and for amendment. And these are recommendations that are provided to the commission from both the department and various members of the public and our stakeholders. And my recommendation for the commission would be to take a look at those regulations. And if we want to pull any for discussion, we pull those aside and treat the others on lists 1 and 2 as a consent agenda and vote them all for approval or denial of those recommendations at the will of the commission. And then with respect to list number 3, the list number 3 pulls out approximately, I think, 8 regulations that we've received recommendations from various stakeholders in the public to which the department has a response for the commission's consideration. And I thought we would take each of those regulations for discussion separately. Is that amenable to the commission?
Absolutely. I don't have any problem with that.
Okay. I did want to note again for the record, Yvonne Navarez-Goodson, with respect to list number 2 for the proposed amendments, I did note a couple of errors or additions from the materials that you were provided. And so the first point I would want to make is to pull the recommendation on list number 2 for NAC 372.938. This is a regulation that actually is going to be discussed under list number 3. I'd also like to pull NAC 372.101. The original proposal for that regulation is being pulled in lieu of a new proposal. The old proposal was to make all transportation, shipping, postage, handling, packing, and crating taxable regardless of being separately stated. Such that all delivery charges would be taxable. And now we are recommending a separate change to that particular regulation. The new proposal would be to clarify that delivery charges included in the sale of tangible personal property that are subject to sales and use tax, including any charges for transportation, shipping, or postage, which are stated separately on applicable invoices, shall be based on the actual cost of such transportation, shipping, or postage. And that recommendation is consistent with a technical bulletin.
Okay.
And then finally, on list number 2, I would like to add NAC 361.6405. That was an oversight that we forgot to include that particular regulation, and that regulation deals with obsolescence. And with the chair's permission, I would like to defer to our Deputy Director Mitchell to explain the reason for including that recommendation in this as well.
Perfect. Go ahead.
Thank you, Mr. Chairman. Jeff Mitchell for the record. This regulation amendment has to deal with the proper application of obsolescence when dealing with State Board of Equalization cases, and making sure that that obsolescence doesn't cross multiple years of rolls, making sure that it only applies to the proper rolls that are in front of the State Board of Equalization that are under appeal. And so this is clarifying how that obsolescence is applied.
Okay.
That's all I have.
Okay. Mr. Chair, actually, if I may, it looks like NAC 361.6405 might be under the jurisdiction of the State Board of Equalization and not the Tax Commission.
Okay.
Mr. Mitchell, are you able to confirm that quickly?
Give me 1 second and I will confirm.
Okay. With that, Mr. Chair, until we can confirm this 361.6405, those were the only regulations that I wanted to address separately in lists 1 and 2. If there are any other regulations out of either of those 2 lists that any members of the commission would like to pull for additional discussion, perhaps now, and then we could vote on the rest of them.
Okay. Is there anything anybody would like to pull?
Chairman,
Mr. Chairman,
Yes.
Commissioner Byram, I have a question first, kind of preliminary. We are
moving to approve a report that goes to the governor. We're not moving to change regulations today, correct? Or do these come back to us for additional deliberation and a motion to make the change to the law at a later time? Because, or is there something different going on where the governor just adopts what we recommend? Because I think it makes a difference in how much input we gather.
Mr. Chair, if I may respond?
Yes, please.
Thank you. For the record, Yvonne Navarez-Goodson. Thank you, Commissioner Byram. That is an excellent question. I think I did provide that background in your materials, but you are correct. For clarity in the process, at this point in time, the governor's executive order has requested a recommendation from every agency, board, and commission regarding the regulations for which it would repeal or amend. We don't know at this juncture what the governor's office will do with those recommendations, but we anticipate that we will receive feedback in response to the report that we provide the governor as to which regulations the governor will ask the department to pursue. At that point in time, unless something were to change in the meantime, the commission would be required to then comply with the requirements of NRS 233B for formal adoption of regulations or repeal of regulations, which would at that point require the department to provide language to the Legislative Counsel Bureau. The Legislative Counsel Bureau would provide us a proposed regulation in the exact language that would have been vetted by LCB Legal. We would notice that language to the public for an additional, more thorough workshop with public stakeholders on those regulations. And then we would have another public hearing before the Nevada Tax Commission for formal adoption of those changes. And those are the requirements under NRS 233B. And upon any adoption at that juncture by the Nevada Tax Commission, it would go to the Legislative Commission for review and approval. So any actual changes to these regulations will have another opportunity for public workshop, for public hearing before this commission to fully vet those amendments and those changes.
Thank you.
Mr. Chairman?
Yes, go ahead.
Thank you, Commissioner Brown. I appreciate that explanation. And I first want to, before I make my comment, I want to say this is a yeoman's load of work that the department's undertaking to identify these regulations for adoption or for amendment or for repeal. And it's a tremendous body of work, and I appreciate the work they've done. With the explanation that Deputy Director Navarez-Goodson just explained, I guess I have a question of her, and that is, there are 3 of the documents in the amend package under 360, 361, and 372 that have typographical errors in them. And I don't know if that's something that we need to address today, or if we're just going to say these are the regulations and we can clean them up at some other point. I assume that, you know, if they went as they were today, the Legislative Counsel Bureau would clean them up. It's things like numbering and just typos and things like that. Or if we don't need to worry about that today, just the regulation itself, move on.
Thank you, Commissioner Brown. This is Yvonne Navarez-Goodson for the record. I would be happy to take any feedback on typos or clarifications if they're not substantive before we prepare the report for the governor's office. But unless they're substantive, I think we can probably approve the changes, and we'll make sure we clean that up for the formal report that goes to the governor's office. Thank you.
Okay. Any other comments or questions?
Mr. Chairman, this is Commissioner Byram.
Yes.
I'm not sure if you want me to pull these just to ask a question or not, but when it comes to 361, 150, 151, those were requested by the Clark County Assessor, I believe, and it changes the ratio study. It changes some of the requirements that the county assessors handle. It changes maybe what they have to do in their audit. Are they aware of that? Are the other stakeholders aware of proposed changes, and have they made any comment?
Thank you, Commissioner Byram. Again, this is Yvonne Navarez-Goodson for the record. I'm not aware of any formal comment by other stakeholders or other assessors, although we did provide notice of these changes to for this public hearing, as well as we had the workshop for consideration of those regulations, and no other assessors made either written comment or appeared at the workshop. So that would be the outreach that we've had at this point.
Okay, thank you. On 375A 0, 1, 0, 2, 0, and 3, 0, if those are repealed, that just effectively repeals the entire chapter 375A. So we're not leaving it there as a placeholder. We're removing the chapter, correct?
No, 375A is.
Mr. Chair, one quick second. We'll look that up really quickly.
Okay, take your time.
Estate taxes. Because it's estate taxes. They're gone.
It is repealing the whole chapter. Okay, thank you, Mr. Chair. Again, Yvonne Navarez-Goodson for the record. Yes, in response to Commissioner Byram, yes, we would be repealing the entire chapter of NAC 375A because the federal estate tax was phased out by the IRS. It's no longer applicable here. So we would be repealing that entire chapter out of the NAC.
Okay, and then on the NAC
Commissioner
490
Lippman, may I interrupt? Yep, I apologize, Commissioner Byram, but just for clarity, the federal estate tax has not been repealed. So a federal estate tax still exists. So I think what you mean is the piggybacking on, or I'm that just there is a federal estate tax, so that has not been repealed.
Yeah, thank you, Commissioner Lippman. You are correct. I'm sorry if I misspoke on that. And actually what I might do, I might lean on our tax manager, Jolynn Smith. This was one of her recommendations based upon our statutes. Maybe we could have tax manager Smith weigh in on this one if she wouldn't mind. Yes.
Apologies to Commissioner Byram. We're moving very quickly here on, very detailed and extensive documents. And I do understand people have been noticed, but as Commissioner Brown indicated, this is an enormous amount of work. And not only has the Department of Taxation been tasked with this, all the other departments have as well. So perhaps they haven't had the capacity or bandwidth to be responsive. And I am comforted, and thank you, Commissioner Byram, because when you asked the question about procedure, I wanted that to be in the record as well, that this is very preliminary, but, this is extensive. And the goal, I believe, from the governor's office is for clarity and to move in a direction of providing more streamlined documentation of Nevada's laws. And so we don't want to move in the wrong direction, right? We want to move in a direction that clarifies and streamlines. I worry that if we move too quickly, we could be creating more of a mess and more confusion and less clarity. So I just want to go on the record as saying that.
Okay, thank you. Did we have some more clarification on the?
Yes, thank you, Mr. Chair, and thank you for that clarification, Commissioner Lippman. We do have tax manager Smith available to respond.
Good morning. This is Jolynn, tax manager for the department. And that's correct. It's the credit against the federal estate tax. So yes, the federal estate tax is still in existence. It's just the credit against the federal tax, estate tax that was sunsetted.
Right. So it's the state credit against the federal estate tax.
Yes.
Okay. Yep. Thank you.
Okay, thank you. Commissioner.
Mr. Chair,
It was
Yes.
Chairman,
Yes, go ahead.
this guy Childers for the department. Going back to NAC 361 that Commissioner Byram was asking about, we do have the Clark County Deputy Director for Clark County Assessor's Office here who can speak to that if she would like.
It would be helpful to have information on whether the Nevada Association of Counties have discussed this with the membership.
It's on.
This is Mary Ann Widener with the Clark County Assessor's Office. For the record, can you hear me?
Yes, go ahead.
Okay, fabulous. I also am the committee chair for the Regulation Committee for the Nevada Assessors Association. All of the recommendations that we put forward, we understood that these are some things that the department was also recommending. And a lot of our comments were really that we were supporting the department with regards to those recommendations. Some of them were ones that we also suggested, but the documents that we did submit had been given to all of the assessors that are a part of the association, and no one came back to me with anything that they had any issues with. So I just wanted to put that on the record to, alleviate any of Commissioner Byram's concerns with regards to those things. Thank you.
Okay, thank you.
Thank you. That helped. Mr. Chairman, if I have a couple more questions, if I may.
Go ahead.
Okay. When it comes to the NAC 490 that belongs under the DMV and not the state, should we be moving that and not repealing that? Because it's basically just being renumbered, if I understand right. If we repeal it, it would count as a new regulation for them, and then they wouldn't be allowed to put a new regulation in. I don't know, I'm just guessing how this is going to work because we haven't done this before, but I don't know if we want to repeal those and make them start from scratch, or if we're just renumbering these over into their group, or if it's not our chapter, then do we have the authority to remove someone else's chapter? Or is it just under their purview?
Thank you, Mr. Chair and Commissioner Byram. Again, this is Yvonne Navarez-Goodson for the record. With respect to the provisions in NAC 490, they were moved from the jurisdiction of the Nevada Tax Commission to the Department of Motor Vehicles. When we saw these leftover provisions that still remained under the jurisdiction of the Nevada Tax Commission, we think that they were just provisions that were not ultimately amended when the Department of Motor Vehicles took on the off-highway vehicles, and our staff has reached out to the Department of Motor Vehicles to let them know that we would be making this recommendation to remove them from our authority so that they could include them back within their own chapter or within their own authority. So the Department of Motor Vehicles is aware that we're making this recommendation because we do not have jurisdiction any longer over the off-highway vehicles.
So, but if we were to make a motion on this as say a consent calendar for that section, I think we would say to remove from our, remove to the DMV rather than repeal those. I mean, I'm just worried about them having difficulty if they're missing until they can get them approved. But if that's not a problem.
Yeah, I'm sorry. It sounds like they've already moved it over to them. Did I hear that correctly?
They removed all but those, they thought she said.
Stragglers. These were stragglers.
Yes, again, Yvonne.
Okay.
Yeah, Yvonne Navarez-Goodson for the record. Yes, the entire chapter has already been moved over to the authority and the jurisdiction of the Department of Motor Vehicles. And so your point is well taken, Commissioner Byram. I think it's the intention of the Department of Motor Vehicles in their report to recommend that they be able to define and use these terms for their own chapter. So we can provide that clarity in the report to the governor's office. And then, of course, when we do move forward with these regulations, we'll be sure that the Department of Motor Vehicles has a say in whether we actually repeal them or if LCB can even coordinate that behind the scenes. I'm not sure how that would work, but I'll be sure to make that note in the report to the governor's office.
Okay, and I do have one final question, and it has to do with the tax on insurance premium 680B. We are removing a segment from 680B 150 to 680B 250, and that leaves 680B 005 through 0095, which is fees under the Commission of Insurance. So we no longer will have any regulations left in 680B, correct?
Again, Mr. Chair, this is Yvonne Navarez-Goodson. On this particular recommendation, I would again like to defer to Tax Manager Jolynn Smith to help explain that.
Okay, go ahead.
Can I have just one moment? I want to make sure I don't misspeak.
Sure, take your time.
I apologize. We are repealing. One moment, please.
Okay.
Okay, I'm sorry. I wanted to pull up the NAC. So 680B, the portions that are being repealed all apply to the home office credit, which is no longer available.
And then the only thing remaining in 680B falls under the Commission of Insurance. So 680B 005 through 0095 are no longer or are not under tax commission, correct?
Correct.
Okay, that was the end of my questions on list number 1.
Okay. Any other questions on list number 1?
Mr. Chair, I would note for the record again, Yvonne Navarez-Goodson, we were able to clarify that NAC 361.6405 is under the jurisdiction of the State Board of Equalization. So I will retract my former addition of that section to the NTC. My apologies for that.
Okay, no, that's fine.
Great.
Commissioner Lippman, for the record, I'm just wondering if Commissioner Byram's suggestion perhaps that we move the DMV provisions from this list perhaps to the amendment list might make sure that it doesn't fall through the cracks and get repealed. I know that you've noticed the DMV, but every department seems to be quite busy, and I wonder if they had the opportunity to think it through. So that might, is that, I think that's consistent with your concerns, Commissioner Byram, that it just not be repealed and then the DMV have to go through the legislative process again, which is time consuming. And obviously the LCB is going to be very busy.
Commissioner Bryan, you're muted. There you go.
You might be glad about that. I don't know. No, I agree. I think that would help pull this one out and have it not kind of get lost in the shuffle.
Yeah, there's a lot. There's be a lot of information going to the governor's office, and I think streamlining and efficiency would be a better way to deal with it. Just renumbering is really the issue, getting it into the DMV's regulations.
Okay, I think that's a fair suggestion.
Thank you, Mr. Chair. If there are no other questions with respect to list 1, I could probably recap it and see if the commission's ready for a vote on list 1.
Okay, go ahead.
Mr. Chairman, are we going to take public comment on them as well?
We probably should. So, yeah, because I said earlier, as these came up, if anybody has any specific comments on what we've talked about so far, then I would accept other information or suggestions at this point also.
Chairman Wren?
Yes.
This is Mary Ann Widener with the Clark County Assessor's Office down in Las Vegas. Just a question, because what Yvonne just mentioned was NAC 361.6405, which she had brought forward and now is saying it's under the State Board of Equalization's authority. Just asking the question because both NAC 361.131 and .6405 were all part of that regulation together. And so we're keeping NAC 361.131, and that's still under the Nevada Tax Commission, but the other one is under the State Board. I just want to ask for clarity to make sure that's exactly how it's supposed to be done.
Mr. Chair, if I may, I'm going to defer again to Deputy Director Mitchell to respond to that question.
Okay.
Thank you.
Thank you. Jeff Mitchell for the record. Yes, upon review of those two regulations, they worked in correlation to accomplish the goal of the amendment, but NAC 361131 is under the Tax Commission and NAC 3616405 is under the State Board of Equalization. And so the proposal would be to recommend this moving forward. But obviously we would have to see how the State Board, if they also agree, it would have to work in conjunction with one another for this regulation.
Okay.
And also for the record, Mr. Chair, the State Board of Equalization will be holding its public hearing on regulations next week. So we will move that section over to their review.
Okay, very good.
Thank you very much.
Okay, thank you. Any other comments?
Yes, please. Sorry for that. Good morning, Chairman Wren and Commissioners. For the record, my name is George Ritz, it's spelled H-R-I-T-Z. I'm with the Nevada Taxpayers Association. On that list one, you have, and I'm just putting out there more of a question. We have NAC 372.101, where an auctions when owner bids on their own property. And the only question I have below that, you have NRS 360.550, sell a property for delinquent taxes. We have NRS 360.560, return of excess proceeds of sales, right, of other lien holders. So there's also the NRS 360.530, seizure of property by department for payment of sales and use tax. And then the last one I found was NRS 360.535, regulations concerning claim of ownership, interest in property. So my only thought is if the departments went out and seized a business and the taxpayer went in and voted or went into an auction to buy a piece of property back, would we want to charge them tax on that? So that's kind of my question. I know an auctioneer is taking control, but I also believe the department has the ability to sell those same items.
It'd be considered a separate sale, just like. Glazer, for the record, wouldn't it be considered a separate sale, an additional sale, just like, for example, if somebody were to buy something from the pawn shop or from a consignment store, they would be charged tax again because that was, in fact, George might be able to respond. Guy will be able to respond to this one.
Mr. Chair, if I may refer to Tax Manager Childers, he's down in Las Vegas to potentially respond to this question.
Yes.
He just walked away.
I was gonna say he left.
I'm here, Commissioner.
Go ahead.
What was the question again, George? Can you repeat that for me? I'm just, in regards to,
Basically, this scenario, I believe, I'm sorry, for the record, George Ritz with the Nevada Taxpayers Association. So my question was on NAC 372.110, which would basically happen in a scenario where the department went and did a lock and seizure on a business and hired an auctioneer to come in and auction off the equipment. And the taxpayer, maybe there was one item that they had in there that they wanted and came in and bid on that auction item. Would that in a sense be double taxation possibly? That's my question.
George, I don't think so. I think that we'd be talking about two separate transactions from our standpoint.
Right. Well, and the only thing that concerned me, what brought up the question is, anything extra is paid, is given back to the taxpayer on beyond the liability that's owed. So if we're going to give back the taxpayer any additional amount that was of his product that was sold or the assets, what if not everything was sold? Would we give that back to them?
If they put it up for sale and it was theirs originally,
Right.
part of the thinking here, George, and I know what your question is, but part of the thinking here is that in an auction situation, there is a chance for this situation to be abused. Someone putting it up something for auction and then bidding on it themselves. The possibility is that they could be just in that auction situation driving the price up because they're the ones selling the item and they're looking to possibly drive that price up. It seems to be that was part of the thinking here is that this particular rate could be abused, and how often does this really happen? How often does somebody actually bid on their own item for legitimate purposes? Maybe I don't. We don't audit that many auction houses, so I don't know if I've actually seen that situation before.
Yeah, for clarification, Commissioner Nguyen, through you to Guy Childers. Again, George Ritz for the record. I was thinking this scenario would come up in a lock and siege where the department went out and the taxpayer was delinquent, went out there with the sheriff, changed the locks, and then took inventory, hired an auctioneer to come in and sell that product. In that scenario, the taxpayer might come back and try to buy one item. The only time I've seen it was in a cabinet shop. And the guy did have one piece of cabinet that he appreciated, but he had clients too that could afford to loan him some money ahead of time and pay the department, which they released the lock and seal. So he was able to go back in there and do his business. So I was only thinking if the department did the lock and seal, took possession, did the inventory, and then hired an auctioneer to sell the product. And then that taxpayer business owner, prior business owner, came in and bought a piece of equipment or in this case, would have been like a cabinet. And that was the only question I had. I'm not saying it should stay, but when I saw the other statutes, I was thinking, is that a possibility?
Okay, I'm not sure if there's a question actually in there, George, but one of the things I'm thinking here is that you said it yourself, that the item no longer belongs to the taxpayer, it belongs to the department because it's a lock and seal. And there's a reason for that because of delinquent taxes. And so now it belongs to the department. So he's not buying back his own asset. He's buying back what's owned by the department now or the state.
Right.
So
Again,
there should be tax on it.
Yeah, again, George Ritz for the record. And that's the only thing that brought that. I was wondering that because of NRS 360.560, where the state would return excess proceeds of sale right to the lien holder, state treasurer, or to act as trustee. And I was just thinking in that case, if there was extra items still left, you might give it to the back to the taxpayer. I don't know. Or I guess if we go with what you were saying, we'd probably just go ahead and dispose of the rest of it that didn't sell.
Yeah, George, I'm not sure I can answer that question for you because dealing with the audit side, I don't deal with lock and seals and transactions you're asking about.
I just wanted to put that on record. Thank you. George Ritz again.
Thank you very much. Yvonne, you want to give us a recap?
Yes, you bet. Yvonne Navarez-Goodson for the record again. So it looks like with respect to list one, which are the provisions recommended for repeal, We have not only those provisions that are on the list itself, but we have a change to NAC 372.101. And that's the provision I reported at the beginning of the meeting. So instead of the original proposal, oh, I'm sorry, scratch that. We're on repeal. My apologies.
Okay.
Getting them mixed up myself. List one, what I understand the change to list one to be is that are going to move the provisions for repeal from chapter 490 out of list one and put them into list two to become provisions for amendment instead of repeal.
Okay.
And otherwise, I think list one stands on its own.
Okay. If we don't have any other questions, I would entertain a motion.
This is Commissioner Roder. I would so move.
Okay.
Commissioner Bursey seconds.
Okay, thank you. I have a motion and a second for the discussion. Seeing none, all in favor say aye.
Aye.
Opposed? Motion carries unanimously. Okay. Next item.
Thank you, Mr. Chair. I think at this point we will move to list number 2, which are the proposals recommended for amendment. And in this list, as you recall, at the beginning of my comments, we were going to pull NAC 372.938 from this list and consider it as part of list 3. We are also going to change NAC 372.101, the original proposal. Again, for the record, made all transportation, shipping, postage, handling, packing, and crating taxable regardless of being separately stated, such that all delivery charges would be taxable. We are now proposing instead of that to clarify that delivery charges, which are included in the sale of tangible personal property that are subject to sales and use tax, including any charges for transportation, shipping, or postage, which are separately stated on applicable invoices, shall be based on the actual cost of such transportation. So the amendment there would be the terminology actual cost for such transportation, and that is the requested amendment to NAC 372.101. And again, for the record, we will be also considering now under list number 2 for possible amendment, the provisions that had previously been recommended in chapter 490 for repeal, to take them out of the jurisdiction of the Nevada Tax Commission and move them over to the Nevada Department of Motor Vehicles. Those will now be considered for amendment rather than for a repeal. And with that, Mr. Chair, if members of the commission have any other provisions for amendment that they would like to pull and discuss, we could do that and then defer also to our stakeholders who are present.
Okay, very good. Any questions from the commissioners?
Yes, Mr. Chairman.
Yes, go ahead. Commissioner Rutherford.
I think that's Commissioner Brown.
Oh, I'm sorry. Commissioner Brown.
Thank you. I appreciate it. I have a question on 372.700. And I don't know if it's a question for the department or for Mr. Pope, but on that, the proposed amendment, item subsection 7, it appears to address sort of what I call the Las Vegas conventions, coming to town for a sales tax exemption. And my question is this. I like the amendment and it makes sense. And I think it addresses a lot of what we spend our time on at routine tax commission meetings. But there was a recent court decision, and I believe it's to a specific case and may not be applicable generally. But I'm just wondering if what the relationship or what the impact may be as a result of the recent court case on a similar matter.
If I may, Mr. Chair, I might defer to our Chief Deputy Attorney General, David Pope. I'm not sure which legal case you might be referring to, Mr. Brown, so I'll defer to our attorney, David Pope, if he's available.
Mr. Pope. There you are.
Hi, everyone. David Pope for the record. Yeah, I apologize. I'm not aware of the court decision, and I'm really not prepared to answer that question. Is that something that we could get back to you all on?
And to be fair, you're right. I think Ms. Nichols was the representative, was the lawyer that handled it on behalf of the department. So happy to defer this or to just move forward and talk about this at another point.
Thank you very much.
Okay, any other questions on from the commission?
Commissioner Lippman, for the record, I'd appreciate some clarification on the amendment that was described. I was trying to follow the logic behind it. 372.101. If you could just explain why you're changing from the current language to the proposed language, that would be helpful for me. Thank you.
Thank you, Mr. Chair. And Commissioner Lippman, I'm going to defer to Deputy Director Roebuck, our Deputy over Compliance. Thank you.
Good
Okay,
morning,
go ahead.
Commissioners. Deputy Jennifer Roebuck for the record. This particular change has to do with a lot of concern about the clarification with delivery charges and what's taxable and what's not taxable. And we've had quite a few questions and concerns about what that exactly means. We do have a technical bulletin on our website that addresses what that means. And it really, this new language, it's 4 words, I think makes a significant clarification to align better with that technical bulletin. Because ultimately the intent, as I understand it, is that they're talking about the cost of the transportation, shipping, or postage as a pass-through that would be separately stated, and then that would be exempted rather than a markup. For example, if you had, say, I don't know, a FedEx or UPS charge that the cost to the taxpayer to ship to the customer was $37.29, but then they mark it up to $40. Well, the actual cost pass-through would have been that $37 and change rather than that markup. So this is to make sure that the clarity is there for the taxpayers to know when to tax it and when not to tax it. Another example would be somebody who's delivering with their own vehicle, their own truck. They're charging a particular amount for that delivery. In our technical bulletin, it talks about essentially like a reimbursement for mileage. If it's something that can be aligned with their actual cost of their vehicle use, then that would be exempt if it was separately stated, as opposed to a flat $150 charge to deliver, to the next county or something like that. So I hope that addresses your question.
It does. Thank you. And so your examples are excellent. So the question, so if there's just a flat charge of $100, but yet the actual cost based upon something like mileage was, let's say, $75. So then only the $75 is exempt from sales tax?
Jennifer Roebuck for the record, only if they separately stated as such. You see a lot of times shipping and handling, which is kind of a lump sum. If they were to separate that shipping charge as to be the actual cost and then their markup charge for their handling or what have you, then that would be the taxable portion. But if it was not separately stated, it was lumped together, bundled, it would be taxable along with the taxable sale.
That's very helpful. But it, as you know, and as we've seen before the commission, this is often a misunderstood issue.
I would agree. Hopefully this helps.
Okay, good. Thank you very much. Any other questions from the
Commissioner Witt?
Yes.
Thank you. I'm really glad that this discussion and this item was pulled. I think that agriculture in general has a little bit more exposure, let's say, to the change that was first there. Let me just give you an example. So we just happened to deliver some compost to Winnemucca. The freight charge was significantly more than the product. And in many cases in agriculture, if you're a grain farmer and you have grain, depending on where that grain goes, you can have a lot more freight than you have in the value of the product. So we've always looked at it to take advantage of not having to charge our customers tax on delivery. So now we go to cost. Seems like it's going to be work for the department to determine what cost is. Those of us in business, especially farmers, are always trying to make ends meet. So this example might be, let's say, an alfalfa grass hay grower that is selling hay to the horse market. There's a lot of horse owners that don't want to haul their own hay. So the farmers step up and do delivery. The discount, I guess, it's almost like, so if you're going to write that up in a separate invoice, which you would have to do to not have to charge your customer tax on delivery, should you be able to make a profit delivering or not? Pretty much everything we do, we try to make a profit at. So then you get into trucking companies and how that's billed. What we've always had is when it's an outside trucker, that service is billed totally separately. And normally they would have paid tax on the purchase of their equipment initially, which we would do, and we do on farm tractors. So anyway, there's a lot of thought. I like the direction that it's going. I just think that it's really good that we're going to discuss it some more. Thank you.
Okay, thank you.
Mr. Chairman, this is Commissioner Byram. I have a few questions.
Okay.
First, I just want to confirm that we are not making any recommendation to change the freight taxability today, correct?
Jennifer Roebuck, for the record, that is correct. These are obviously still recommendations, and we're actually not changing the taxability. It's more to clarify what already exists. And if that's—
I'm sorry to interrupt, but we pulled 372-101 from the list, correct?
Yes, Mr. Chair, through you to Commissioner Byram. Yes, we did pull 372.101 and we have a revised proposal for the commission. So we're scrapping the original recommendation, and in its place, we are now just adding the words actual cost to clarify that the delivery is on the actual cost. So the original recommendation that you have in your materials is being eliminated from the department's recommendations.
And we're to make a recommendation today based on something that this is a substantive change. It should be workshopped, and it's kind of a sweeping change, I would say, if you can no longer separately state. I mean, I thought we were pulling this to deal with it at another time when we can have, I don't know. I'm confused about that. I don't know why that's on there, but I'm like to back up at the top of the list with 360.050. We are talking about adding electronic funds, but what about adding cash? I believe the state has been accepting cash payments. Are you no longer accepting cash payments for the cannabis transactions?
Yes, thank you, Mr. Chair. To you through you to Commissioner Byram. Yes, we do still accept cash for our cannabis.
If you're making a change, we might as well add cash to that.
One moment, just looking at the proposed recommendation.
Sarah Glazner for the record. We didn't change that part because number 2, remittances in currency and coin are wholly at the risk of the remitter. So that's, we left it in number 2. We left number 2 alone because it already had currency and coin listed. Would you, are you suggesting it be added to number 1?
Well, we're amending it to add a new way to pay, and there's, with marijuana taxes being collected in cash, and with them having, at some point, having no other way to pay, I think that would be listed as a valid way to pay, but because cash is legal tender, it has to be accepted in payment of a tax debt. right? Federal law. So
Thank you, Commissioner. As we read the statute, the existing provisions of subsection 2 provide for the remittance through cash.
okay, on the next one, 360.055, and I don't mean to be nitpicky, but you did say that if there's a typo, but you removed paragraph 1 and there's only one paragraph now, so I would remove the number 2. It doesn't need to be numbered, I suppose, or anyway,
you.
fix that. On number 360.058, we want reporters to be certified court reporters if they're making a transcript. So if anyone from the press just wants to record it so that when they write a story, they get it word for word, they're not doing an official transcript. And I can see where you, in a court reporter, if they're making a certified transcript, have to be a certified court reporter. But why would just any reporter be required to go through the steps of becoming a certified court reporter just to make a transcript? They're not holding it out to be the certified report of the meeting. Is there a problem with that? Has that been an issue?
Mr. Chair, through you to Commissioner Byram again. This is Yvonne Navarez-Goodson for the record. I think the intent here in adding that a reporter would be licensed is for purposes of the official hearing transcript. So these are for hearings before the commission or an administrative law judge. And those transcripts are documents that end up sometimes on judicial review. So we would like those official transcripts to be by a licensed court reporter for purposes of certifying the record.
But it doesn't, but a reporter from a newspaper can make a transcript for their own use. They're not using it for follow-up hearings or for any other certified transcript. So it just seems like we're adding something that's not necessary because.
Perhaps what could provide more clarity is that when we use the term reporter, we're not talking about a news journalist, we're talking about a court reporter.
Can you put the word in court reporter?
Yes, we'll take a look at that and make sure that if reporter is not otherwise clear that it's a court reporter, we'll make that clarity.
Okay. On number 363.96 at the bottom of the first page, this talks about being able to write off a $15 amount of penalty and interest. That $15 dates back to 2008. So 15 years ago, $15 may have been what was considered material then, but can that be upped a bit so that this isn't, so that it captures more immaterial amounts, maybe $50 or $100 or something?
Thank you, Commissioner Byram. I'm going to defer to Deputy Director Roebuck to respond to that question.
Hi, Jennifer Roebuck for the record. Thank you for the question, Commissioner. This actually dates back to when we first implemented our current UTS Unified Tax System, TAS. And our system is set up to not, and Ms. Glazer could probably correct me if I'm wrong because she was there for this too, was set up to not send out billings for amounts under $15. And so as a result of that, they updated this regulation to just automatically waive it. However, let me make sure I'm reading this correctly here. Yes. However, if the tax wasn't, the tax that the penalty and interest is based upon has not been paid, that penalty and interest, or at least the interest, continues to accrue for years until it hits that $15 mark, and then a bill will go out. So our change here says that the $15 is based on the date of the pay, or the actual payment. Once that tax measure is paid, then that will, if that penalty and interest is under that $15, then it will automatically be waived. And again, that's simply a result of our system change back in 2005-06 that did not allow billings to go out for amounts less than $15. And I believe that $15 was based on the sales tax permit fee, actually.
Sarah Glazner for the record, it actually is $15. It's $5 in each chapter, 374, 377, 372, which equals the $15.
Okay, so just a simple question, is that amount still an appropriate amount to have, given that that was so long ago?
Jennifer Roebuck for the record. I think that that certainly could be reconsidered. However, for purposes of this executive order, I think that possibly that might be an overreach. But I think that at any time we can certainly take a look at making a change to a higher amount.
Okay, gotcha. All right, and then my next question is 360-444. We're changing the language within that chapter to say department rather than commission, but the heading still says commission. So we may want to make that change in the heading as well.
Jennifer Roebuck for the record. As I understand the regulations, the titles are up to LCB, and it's actually not part of the regulatory process to make those changes, but I could be wrong because I'm not involved in that.
Okay. It would just be logical, but maybe suggest that change and then they can decide whether or not to.
And Jennifer Roebuck for the record, if I could just tag on to that just a little bit. We understand that these are initial suggestions to make these changes, all of these changes, and these will absolutely be vetted through LCB, who will make their professional recommendations with their expertise.
Okay. On the next page on 360-480, we're talking about wanting to change this so that it encompasses a penalty and interest that has not yet been paid. And we're talking about it as a refund. And it also includes the language waiver. I'm trying to read my handwriting. It's kind of tricky, but I just want to make sure that if it has not yet been paid, a refund of it isn't the correct language. It needs to be a waiver or I think it says waiver or credit. Anyway, just and in 360-485, there's a random word "and" at the end when the following paragraph has been taken out.
Oh, thank you, Commissioner Byram. I think we're just trying to take a look really quickly at your comments regarding 360.480. If I could just have one moment, I'm going to defer to Sarah Glasner with the department. She might have a response for you on that.
Sarah Glasner for the record. Commissioner Byram, what the intent is with this is a claim for refund, as you know, has to be claimed within 3 years statutorily. And what we had added for this proposal is whenever, for example, when something is adjusted in our system of record, it then would go up on the credit. So for example, if somebody had paid the penalty and interest and they paid it before the waiver and the department waived it, that payment would go up as a credit, and that's when the statute would start, the 3-year statute, not when the P&I was actually paid, because they may not have asked for a waiver for 5 years from then. So that statute doesn't start until the payment is established as a credit in our system of record. And the same would be for any amended returns or adjustments. That's when it would start. That's when the trigger would start the statute. Does that make sense?
Yeah, that does. Thank you.
Mm-hmm.
On 360-700, you've changed the word will to may when it comes to an audit. So you're talking about when you start an audit, you tell the taxpayer when it's going to start and when you estimate the ending date of the audit work. And then you're wanting to change the word "it will end" to "it may end." And the problem that I have with that is that just leaves it wide open. And when someone's the taxpayer's dealing with an audit, they want to have a date certain that it's expected to end. And when you're approaching that date, you can request a waiver to be signed to give additional time, and especially if the taxpayer has been the cause of a delay, they generally will sign a waiver to allow additional time. Or if they have more access to documents they just haven't been able to get yet. But changing that from may to make it permissive, I think I would adamantly oppose that. Because that just takes away the expectations, the comfort some taxpayers are going to have that the audit has some sort of a date certain that it's expected to end. Can I understand maybe what your thinking was on changing that language?
Thank you, Commissioner Byram. Again, I'm going to defer to Deputy Director Roebuck or Tax Manager Guy Childers.
Deputy Director Jennifer Roebuck for the record. I'll take a stab at it first, and then Mr. Childers can fill in where I miss it. So the estimated completion date is an extremely important date in order for one to be called estimated, right? So this impacts any interest, and so the department is required to state when we expect the audit to be complete. It needs to be mailed by that date. If we are late, or if the department needs to extend because of department circumstances, that will actually stop interest from accruing should there be a deficiency. If the taxpayer, just to give some background on it, if the taxpayer needs to ask for additional time, then the taxpayer requests that in writing, and the department may grant that, and the interest does continue to accrue in that case. So the thought process behind this, I believe, as I recall, it's been a little while, is that because it's considered an estimate, to have in our discussion in the pre-audit interview is to talk about the estimate by of the date by which the audit may be completed. And then we put in the confirmation letter what that estimated date is. It doesn't change the impact of the expected date or estimated date to have the audit completed. It just, I think, clarifies that it's still an estimate, and then, but it does not change how we need to address it should that date need to be changed. Mr. Childers, did I get that right, or did you have anything to add?
No, Deputy. I think you got it right.
Oftentimes the date that it's estimated to end, estimated to be wrapped up and a final report done is tied directly to the statute of limitations on the beginning date of the audit period. And when you come to that date, you either need to assess the audit or obtain an extension of time to continue, and that keeps those periods in the statute. And so I still adamantly oppose changing it from will to may. I mean, it does say it's an estimate, so that should take away your concern. So it is estimated that it will end, I think should stay the language. So I'm opposed to that change.
Commissioner Byram, just for clarification, this is Guy Childers for the department again. The estimated completion date and the date on a waiver of limitations, they may in fact be the same, but they are not they're not directly tied to each other. They can be different dates, and they have in the past been different dates. So just because the estimated completion date is one date doesn't mean the waiver is that date. It's tied to when that period may expire. We could have an estimated completion date 6 months out, but we may have a waiver of limitation date only 3 months out because of the periods involved. So the dates are not the same technically.
Okay, and I'm aware of that. I've dealt with hundreds of tax audits in multiple states, mostly in Nevada, and about 95% of the time, the date that it's expected to be assessed, which is the ending date, also is tied to the statute, the statutory period that's being audited, and will need to be extended because they audit for 3 years, and you've got that beginning period is also tied to that date that they expect to assess it. And if you don't assess it that day, it has to be extended. So I don't like that date being permissive. It needs to stay will. And I think that we need to pull that change and have it discussed at a different time. But that's controversial. That's going to affect a lot of people that I doubt really understand or have the notice to be able to opine on that or to provide some comments on that. So I don't approve of that recommendation, but I can move on to the next comment I have if you want.
Go ahead.
Okay, we're talking on the 360-706. We're talking about having the procedure of an audit. So generally, I don't understand why we would involve the hearing officer before a redetermination has been provided. So when there's a tax audit, the taxpayer, there's a final audit report, the taxpayer, it's called a determination. The taxpayer can file a petition for redetermination. Then the taxpayer is still working with the state, providing information, providing documentation, and they may or may not get an adjustment, but then they're going to get a redetermination. So they've had their initial determination, then they get their redetermination, then they have a decision point. Do I appeal this? Do I request a hearing or do I not? Do I accept the results? If you don't accept the results and you want to go to a hearing officer, then request a hearing, then documentation should go to the hearing officer. But why would, as they're trying to work through things, why involve legal counsel on the state side and the taxpayer is still trying to work through detailed portions of the audit, trying to get an audit adjustment? I don't understand why the state would want to involve a hearing officer, to provide all that information to a hearing officer. It just seems a little premature and maybe a lot of work for the hearing officer to have to start pulling in information that they may never even need to read or review. I don't understand why we would make that change.
Sarah Glazner, for the record. This recommendation actually came from ALJ Smith. What the issue here is there's nowhere in statute or regulation that really gives us authority regarding the hearings for this purpose. And correct me if I'm wrong, but I think it's NRS 360.365 that states for the redetermination that they can request a hearing. It says in the statute that if it has not been agreed upon between the taxpayer and the department, it will go to hearing. And we have several taxpayers that have made it very clear that they do not want to go through the redetermination process, that they would like to go straight to hearing. And that is why ALJ Smith had put in the two stipulations that if they request a hearing before the redetermination, it'll go to the hearing officer. And if they do not request a hearing, it'll be sent to the hearing officer after the department has reviewed the additional information. With that being said, if it does go to the hearing officer and they provided more information, the hearing officer is going to say, why didn't you give this to the department to review and remand it back to the department anyway for information? But we have taxpayers that just refuse to go through the redetermination process, and it is in statute that they can request a hearing and bypass the redetermination.
So they can waive, if they were to say, okay, you have 45 days to, in your petition, you don't want to do a petition for redetermination, you can waive that and go direct to ALJ hearing. But this doesn't.
Yes, and we're actually going to, excuse me, Sarah Glazner, for the record, we actually are going to, we had a suggestion of requiring a waiver of that, of fill a form, if you will, for the taxpayer to fill out, waiving their right to redetermination and go straight to hearing so that they are aware of what they are asking for.
And then a taxpayer that does want to go through the redetermination process ought to be able to just be dealing with the state auditors and not have the state pull in a lawyer to start looking over their shoulder and providing some input. The taxpayer should be able to be dealing directly with the auditor, working through the issues.
Absolutely.
So do they have that right still under this language?
Absolutely. This is really for the taxpayers that, and per 360, 365, that they want to bypass the redetermination. In fact, Mr. Childers could probably attest to that as well. Sometimes it's just a legal issue. There's nothing to be redetermined. They just disagree with the assessment of the department's legality instead of the actual findings. So that's another reason where sometimes it goes straight to hearing. Mr. Childers, can you elaborate on that?
Yes, yes, I can. You're right that we've had several times in the recent past where taxpayers have requested not to go through a redetermination and go straight to hearing. And in some of those cases, it's not just a legal issue or issue with the statute or regulation directly. They just don't want to go through the redetermination period. They see no benefit in that. And we will, to answer Commissioner Byron's concern, the department will always look at any documentation that the taxpayer will give us at whatever stage, whether it's in the redetermination stage or whether it's right before a hearing. And we've had that on several occasions. And the department will look at it. And the reason for that is because the administrative law judge, just probably like any other judge, does not want to entertain or have come before them a matter where they're dealing with issues that could have been resolved if we had looked at that documentation. They only want to look at the disputed issues. And there are several times where it is just a legal issue, an issue with statute or regulation, and there's really nothing to redetermine as far as the numbers are concerned. The deficiency itself, it's basically a question of the taxpayer has an issue with that statute or an issue with that regulation, and therefore it's a benefit to go straight to hearing and just not deal with the redetermination process.
Okay. All right.
Commissioner Byram, if I may, our Deputy Director Roebuck has an additional comment for you.
Yes, Jennifer Roebuck for the record, just to kind of put a hopefully final point of clarification. The way this reads currently is a little bit binding. It kind of forces the department and taxpayer to operate a certain way. And the way it's been revised actually allows us a little bit more flexibility. So when it says a petition for redetermination, which includes a request for hearing, will be sent to a hearing officer. That way we can go straight to the hearing officer if needed. And the hearing officer through that can also do some communications as well. So it's not, it's going to hearing for sure. It's just, this allows the taxpayer the flexibility to be able to go straight to hearing should they find that they want to do that. And the second portion says, in section B says, which does not include a request for hearing, will be sent to hearing officer after the department has reviewed any additional documentation that the taxpayer has submitted with his or her petition and the taxpayer and department have not agreed to a settlement. So that really does provide, I think, some more flexibility for the department, the taxpayer, and the appeals section to be able to work together to find resolution.
So when they've agreed that they have an impasse, is that a point at which the redetermination is issued, or?
Jennifer Roebuck, for the record, it's if the department and the taxpayer have not been able to agree to a settlement, that's when it would then go to the hearing officer. If they did not request a hearing, if they do request a hearing, they're intentionally asking to go to the hearing officer. So that's really kind of what we're trying to achieve here, is to allow flexibility to be able to address those requests by taxpayers.
Okay, got it.
Thanks.
When it comes to the 372-700, so we talked about that a little bit, and we're going to talk maybe later about whether or not the additional language is within the statutory authority. My comment about that was, it's too bad that this change can't be done without renumbering the paragraphs, because then the department for religious, for the educational exemptions and all that, the department's going to have to redo a bunch of forms. then the briefs, all of the briefs that are written up are all gonna have to be, someone's gonna have to remember to redo the statutory reference in all the briefs. And it seems to me like the change could be made without renumbering the key points and then having to then do all the follow-up fixes. That's just a comment, and I guess maybe reflection of my laziness. Those are all the comments that I had. So I'm okay with everything except the changing the word will to may on the audit.
Okay. So there, just for clarification, especially with that item, regardless of what we do today, this is also going to have time for public comment again, correct?
Yes, thank you, Mr. Chair. That is correct. Any recommendations that come out of today that again are recommended further by the governor's office will have additional workshops and public hearings for stakeholder input and comment.
Okay, very good. Okay, any other comments from the commissioners?
Mr. Chairman, it's Commissioner Brown. As I mentioned earlier, there's a few other typos in there. I'll just submit those to the Deputy Director.
Perfect, thank you very much. Okay, do we have any public comment on list number 2?
Yes, Mr. Chair. Me too here in Carson.
Yes.
Thank you, Josh Hicks with McDonald Corano. And I'm also currently serving as the chair of the Taxpayers Association. So I'd like to make a couple comments on some of these. First of all, I want to thank the department for considering the comments that the Taxpayers Association sent in. It looks like there's a consistent comment on 360.045 with respect to electronic filing. I think that'll be excellent. With respect to 360.050, the memo from the department says that the reg will be amended to include debit and credit card payments. And the Taxpayers Association had also asked for electronic funds transfers to be added. I wasn't quite clear. Was that going to be recommended for addition to?
Yes, yes, Yvonne Navarez Goodson for the record. Are you referring to 360.050?
Yes.
Yes, our proposed amendment includes electronic funds transfer, credit and or debit card.
Okay, thank you. That will be very helpful for taxpayers as well. I just wanted to comment on a couple other regulations that were brought up along the way here. I would echo the comment that Commissioner Byram made with respect to 360-700 and that one word change. I had always read that regulation to really just be an estimate. I mean, that's really what it is. But when you're changing a mandatory word to a permissive word, it just leads to questions is what does that mean? And if it really doesn't mean anything, I would recommend that we just leave that the same so that there's not any confusion over what that is. With respect to 360.706, which we just had the discussion on, I actually felt that that change that the department recommended would be helpful to taxpayers. We've represented taxpayers before, and we've had times where redetermination is appropriate. And that's a lot of times when there are factual questions, there might be a better record that needs to be developed. But we've also had times where there's really no dispute whatsoever on the facts, and they're really just a question of law. And at those times, it doesn't really make sense to go through the redetermination process. It just takes additional time. The other benefit I would say to being able to request a hearing on a question of law is that that's typically when a deputy attorney general gets assigned to the case as well. And sometimes being able to have discussions with a deputy on questions of law can expedite things and sometimes even lead to resolutions or settlements. So we've been in that spot where we've had to go through the redetermination process when we really didn't feel it was necessary. So I do think that would be something helpful. With respect to 372.101, this is the regulation that has to do with delivery. I had the same thoughts listening to the discussion about some confusion over exactly what actual cost is going to mean. So to the extent that regulation, I know there have been looks at this regulation in the past in workshops too. I think that that needs to be examined carefully because, even a markup could be a cost to the taxpayer. So I think that, if the idea is you're trying to catch charges that are not really transportation charges or delivery charges, but are disguised that way, maybe there's a better way to do it. But just having actual cost and not defining what that means, I think, could be problematic. I'm not opposed to, this being a recommendation to look at. I just would say, I think it needs some careful inspection to make sure it's done in the right fashion. And I believe those were the comments I had on everything in list 2. Thank you.
Okay, thank you very much.
Record, George Ritz with the Nevada Taxpayers Association. I was just gonna, could we add, is it open for discussion to add to the reg or to the list? So NEC 372.938, the collection of payment of sales and use tax on rental of tangible personal property.
If I may, Mr. Ritz, we've actually moved that section to list number 3, so we will be discussing a particular section. Is there another one you'd like to? Okay, great. Thank you.
Okay. Any other public comment?
Is there any public comment on Zoom? Please dial *9 to be put into the queue. I don't see any public comment on Zoom.
Okay, I would entertain a motion on list number 2 then.
I think I see Commissioner Byram talking, but she's on mute. Yeah.
I know, I'm sorry.
That's all right.
Mr. Chairman, this is Commissioner Byram. I would move to approve list number 2 for recommendation to the governor as proposed amendments to regulation, with the exception that we are adding NAC 470 as a move from the Department of Taxation to the Department of Motor Vehicles. We are pulling from the list NAC 372.101, and I'm going to propose that we not in 360.700. We do not make the recommendation to change will to may.
Okay, thank you. Do I have a second?
And Mr. Chairman, just for clarification, this is Commissioner Rotifer, and we're also moving 372.938 to list 3. So that's not part of this motion.
I would adopt that change.
Okay, just clarifying.
Mr. Chair, just to also clarify the record, I think Commissioner Byram may have said Chapter 470. I think it's 490 to move those provisions to the amended list.
My bad. You want me to start over or can we work with that?
I'm comfortable with that as a motion. If you want to move forward to obtain us, did we get a second from Commissioner Rotifer?
Yes, Commissioner Rotifer, second.
Great.
Okay, thank you. I have a motion and a second for the discussion. Seeing none, all in favor say aye.
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 Opposed? Motion carries unanimously.
And Mr. Chair, again, this is Ivana Vargas-Goodson for the record. I apologize. I may need some clarification with respect to NAC 372.101. I think Commissioner Byram may have said to pull it. Does that mean that we don't want to offer in the new proposed amendment or just pull it off the list entirely?
You're muted.
I'm sorry. To pull it from the list.
Commissioner Lippman, for the record, so Commissioner Byram is just suggesting at this point in time to eliminate it versus the recommendation that was eliminate it and replace it with new language. And so at this point, I think we're suggesting we just pull it from the list.
Yes.
For
Thank
later
you.
discussion, right?
Yep. This is a, as everyone has weighed in, this is a very confusing issue. And the clarity, I'm not sure achieves the goal. I think we can do better, and hopefully we will in the future.
Okay,
Thank you, Commissioner Lippman, and I on the motion. Thank you very much.
okay, thank you. Okay, list number 3.
Okay, Mr. Chair, I thought with list number 3, I could go briefly through the respective recommendations and we could take each provision for a separate vote. And with that, I would start with proposed recommendation from stakeholders regarding NAC 360.055. The existing regulation in part requires the department to maintain a hearing calendar and post it at the offices of the department. The recommendation from our stakeholders was to post the hearing calendar on the department's website. The department's response to that would be to disagree only because our ALJ hearings are confidential. And so the department would not recommend that we accept that amendment. And if you want to take these individually, we could have that discussion and then vote whether to move that recommendation forward or deny it.
Okay, yeah, let's get them out of the way as we go. So any discussion on that?
Mr. Chairman, this is Commissioner Byram. I just wanted to disclose that I'm on the Nevada Taxpayers Association board and would, I haven't discussed this with them or anybody, but I would offer that I can recuse myself on any that they've recommended if you would like.
I don't think you need to if you haven't discussed them.
Thank you.
Okay,
Mr. Chairman, I apologize.
that's fine.
Commissioner Brown. I'll just make this disclosure. I'm a former board member of the Nevada Taxpayers Association, but not currently a board member, but my employer is a member of the Nevada Taxpayers Association. And I've had no conversations with the organization about any of this matter.
Okay, I think that's fine also. I would entertain a motion then.
Commissioner Lippman's moves to approve the recommendation by the department that we not post these confidential hearings on the department website.
Commissioner Rhoda for seconds.
Do we
I think I have a motion and a second for the discussion. Seeing none,
Mr.
all
Chair?
those- Yes.
We do have public who would like to comment on that here in Carson.
Oh, I'm sorry. Go ahead.
Thank you, Mr. Chair. Josh Hicks with McDonald Crono and the Taxpayers Association. Appreciate the chance to speak. I would request that, you know, as we move forward, you probably might want to give the proposers a chance before we get into the discussions. I think it'd be helpful to the commission's discussion and dialogue. With respect to this matter, I certainly understand the department's position. This was really just a recommendation in terms of just kind of overall public ability to know the business of the tax department. I think this kind of calendar could be posted without disclosing taxpayer names or taxpayer IDs, with just the idea of being giving the public an idea of just how many cases are going through the process. And that's really all we were trying to get at with this. We're not trying to disclose any kind of confidential information. Thank you.
Okay, thank you.
For the record, George Ritz, Chairman Wren. The other thing is too, when you look at NAC 360.0551, the hearing calendar is already posted in the offices of the department. So I was just thinking in the spirit of transparency, just making it easier for us to have access to that, it would be on the website, department's website. The other thing is too, on this, in section 2, I was thinking we might want to amend to remove Elko, the Elko office from this.
Sarah Glazner for the record, it already is on list 1 list 2 to amend, to take out Elko. And I searched everywhere else and that's the only place that Elko is listed.
Good job, Sarah.
Okay, any other comments? Okay, we've got a motion and a second. All in favor, say aye.
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 Opposed? Motion carries unanimously. Okay, next.
Thank you, Mr. Chair. Our next provision is NAC 360.130. The existing regulation relates to hearings on petitions for redetermination and places the burden of proof in an evidentiary hearing on the taxpayer. The public request was to change the burden of proof from the taxpayer during the redetermination to the department. The department's response again on this issue would be to disagree. The burden on redetermination should remain with the taxpayer, consistent with the other provisions regarding redeterminations. And if there's any stakeholder input.
That wasn't ours.
I don't see any public input here in Carson, Mr. Chair.
Okay, any comments from commissioners?
Are there any on Zoom?
If any public comment on the telephone or Zoom, please dial *9. No public comment on Zoom.
Okay.
Mr. Chairman, we did have written comment on this one, just for the record.
Okay.
Commissioner Lippman, any public comment in Las Vegas? I don't know if that was called for.
Yes, Commissioner Wren, this is Mary Ann Widener with the Clark County Assessor's Office. I'm not sure how this particular statute impacts any of our county or state board of equalization hearings, but if it does coincide with those particular hearings, the burden of proof typically resides with the taxpayer to prove that the values are incorrect. And so we would support the department's position on this.
Okay, thank you very much. Okay, I'd entertain a motion.
Commissioner Lippman moves to approve the department's disagreement with changing the burden of proof under NAC 360.130.
Commissioner Roder for seconds.
Thank you. I've got a motion and a second. Further discussion? Seeing none, all in favor say aye.
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 Opposed? Motion carries unanimously. Okay, next.
Thank you, Mr. Chair. Again, Yvonne Navarez Goodson for the record. Our next regulation on list number 3 is NAC 360.170. This existing regulation requires a hearing officer to prepare and serve written findings of fact and conclusions of law, or the final decision on the issues presented in the hearing upon all parties of record and members of the commission within 60 days after the date of the hearing. We've had public stakeholders request to deem the taxpayer to have prevailed on the merits of their argument on a petition for redetermination if the decision is not issued within those 60 days. The department's response to this recommendation would be, again, to disagree. The rationale being that the commission has previously declined to adopt this recommendation. However, the commission's regulations provide for a waiver of interest in certain circumstances, and if there is a delay in issuing an opinion that causes damages to the taxpayer in the form of additional interest owed, the taxpayer may seek a waiver of that interest. And with that, Mr. Chair, we do have stakeholders here present in Carson City who may wish to comment on this proposal.
Okay, go ahead.
Thank you, Josh Hicks with McDonald Carano. Yes, the issue has been trying to find a way to deal with decisions that are delinquent. And I think much of that has to do with the fact that, in my opinion, that we don't have enough spots for ALJs to handle the workload. And we put a lot on them and ask them to do a lot in a short period of time. But with all due respect, that really should not be a taxpayer's problem. That should be the state's issue to fund and fill those positions. So that's why we made this request. I'd note that the department's response that the taxpayer should seek a waiver, that's a whole process in and of itself of asking for a waiver of interest. I know ALJs have waived interest during the period of time between the 60 days and when the decision goes out, but it's a little bit of a made up remedy because it's not expressly allowed in regulation or statute. We just clearly have a rule that just says 60 days from the date of the hearing has to be issued. So while our recommendation is a rather aggressive one, I would suggest that that this at least issue be considered on how it's dealt with, so that we can ensure decisions are coming out consistent with the regulation.
Okay, thank you. Any other comments?
George Ritz, with the Nevada Taxpayers Association, Chairman Marin. I was reading another regulation that was NRS 233B.040. Regulations have the force of law and must be enforced. So I was thinking if we have a NAC here that's basically stating that you have 60 days after the date of the hearing to provide the finding of facts, conclusion of law, and decisions, that if it's not done, maybe we amend this to extend or make that 90 days or 120, what you think is fair and reasonable. But the other thing is too, the taxpayers are being damaged because the longer hearing decisions drawn out, they have the liability of their CPAs and their attorney. So there is a cost to the taxpayer. And that's all I have on this one.
Okay, thank you.
Thank you.
Any public comment on Zoom? Please dial *9. No public comment on Zoom. Any in Las Vegas? None in Las Vegas. Thank you.
Okay, thank you.
Mr. Chairman, this is Commissioner Roder. I guess something for my clarification. Maybe the department can answer this, or maybe it's a question better left for administrative law judge to answer. But how often do we actually go beyond the 60-day period? I mean, is that, an extremely rare anomaly, once in 100, or is it every other case? I mean, how often does this happen?
Sarah Glazner for the record. I have been in this position for a year, about a little over a year. And I have only seen 2 like this. It was in the decision. The taxpayer didn't have to request it. It was in the decision to waive the interest from this month to this month based on the delay of the decision.
I mean, Mr. Chairman, I've represented taxpayers before, administrative law judges with the department in years gone by. And I've actually even been asked on the record if we were willing to waive having the decision within 60 days, given either their backlog or the complexity of the matter that was before the ALJ, which, I understood that, but at the same time, I understand the comments that are being made by the Taxpayers Association that, this becomes burdensome to the taxpayer, but, maybe this is an item. If it's going to extend, beyond 60 days, maybe it's an item for a later workshop and discussion. I'm just trying to understand how often it happens and how administrative law judges traditionally handle it.
Okay. Fair enough. Any other comments?
Chairman Wren?
Yes.
This is Mary Ann Widener with the Clark County Assessor's Office. I'm down in Las Vegas. And I'm not sure how this particular reg affects our hearings for abatement appeals. It looks like this is under the section for hearings on petitions for redetermination. But if this was to impact abatement appeals that were filed based on the tax cap schema that we have, we would not want, just because the judge did not respond in the 60 days, for the taxpayer to actually, win their case, because we want the hearing to be valid and heard, and we want a good decision to be made so that it could then proceed before the Nevada Tax Commission if necessary. So I'm just not sure, again, if this would impact those types of hearings. And so based on that, we would be opposed to the language that was recommended. Or we would uphold what the department is recommending. We understand the delay. We have had some delays in the administrative law judges sometimes getting back to us in a timely fashion in many years in the past. But of more recent years, we have not had as many appeals on the abatement schema. However, we just want to make sure that that would be clear. Thank you.
Okay, thank you.
And I think, Mr. Chairman, that is a concern. I wouldn't want to just say taxpayer wins on a technicality. That I don't want to see that as an outcome.
Right, I agree. Okay.
Mr.
Motion.
Chairman,
Yes,
I would just mention, I'm familiar with public utility law. I'm not a lawyer, obviously, but this proposal, frankly, is not out of the realm of normalcy. At the Public Utilities Commission, there are several regulations that have a shot clock similar to this attached to them, and it becomes what's called deemed approved. So if your application isn't handled and managed in the shot clock timeframe, your application is approved. So I don't think this is super unreasonable. I'm not saying we need to address it today, but the thought of having a workshop and fully vetting this is something that maybe the department might consider.
okay, perfect.
And Commissioner Lippman, as long as others are weighing in, I would say this, and I agree with the public comment that this is an extreme way to approach this. I would be more open to thinking about abating the interest during that period of time. And it sounds like ALJs are doing that. And I also agree that going through the waiver request process is laborious, but I do like the what I think is better for justice, and that is an opportunity or maybe just automatic waiver of interest during that period.
Okay.
I mean, Mr. Chairman, I guess to follow up on Commissioner Brown's comment, I mean, experience I have, and well, I guess a lot of experience I have with regard to the Gaming Control Board and Commission is when you see these types of provisions, they've been more in the area of approving someone with regard to a gaming application or they're finding a suitability, but it was never with regard to a tax item. You don't win on a tax matter on a technicality, since there's longstanding Supreme Court case that essentially says what we all know, that licensed gaming exists in the state for one reason, which is to raise revenue for the state, which is, the purpose of which we have state and local taxes is to support our state governments and infrastructure. So I would agree there is some shock deadline on some matters, but I've never seen it with regard to just a tax matter.
Okay.
Mr. Chair, this is Yvonne Navarez-Goodson for the record. So I think I see two options for the commission if there's agreement. I think either that this recommendation can be pulled altogether, or there can be a substantive recommendation to approve the request from the public stakeholders, or to approve the department's request that it not go forward.
This is Commissioner Byram. Can the stakeholders' request be changed so that it doesn't deem that the taxpayer has prevailed on their position, but it does automatically waive any interest for the delay?
Thank you, Commissioner Byram. So to amend the sections separately to say if the decision is not issued within those 60 days, the imposition of interest would be automatically waived with that language?
It would be stayed. And I think that would, that puts a cost on the state for having a delay. But I don't want to end up with bad tax law by saying that then it goes to their position as being correct, because we're going to end up with some bad decisions. But I think that would maybe, rather than them doing a workaround and informally waiving interest if they choose to, have it be in the language that the interest then is stayed while there's any delay.
Thank you, Commissioner Byram. And just for clarity, we're talking about staying the interest that accrues in between that 60th day and the date the decision is issued?
Yes.
Right.
I think we have maybe a question from Deputy Director Roebuck.
Jennifer Roebuck for the record. Just to clarify, that would be just in the case where there's a deficiency determination as a result of the hearing decision. Is that correct?
Yeah.
Thank you.
Or if it's determined that the state owes money, then the state's interest is going to be accruing in favor of the taxpayer. You know, because they're being delayed, the time value of their money.
We can look at that.
This is Commissioner Bursey. Excuse me, Commissioner Byram. Is there a danger if that the delay may be caused by the taxpayer? And if that's the case, then why would we want to stop the interest from accruing?
Well, it looks to me as though the hearing has already been held and the parties are just waiting for the ALJ to issue a decision. So I think that they've already received it and it's all within the ALJ's control when they issue the decision. So they just have to write the decision and issue it, correct? So I don't think there's any taxpayer delay at that point.
Okay, thank you.
Yes, thank you, Yvonne Navarez-Goodson for the record. Commissioner Byram is correct. This regulation contemplates that the hearing has already occurred and the ALJs will be rendering or required to render their decision within that 60 days.
So any interest on any deficiency would be stayed beyond the 60 days until the date of issue. That would sort of be the language.
Thank you, Commissioner Byram. As I understand, we'll craft some language. Again, this is for recommendation, and if it went forward, LCB would certainly clean it up. But as I understand it, it would be that if the decision was a deficiency determination, any interest that would accrue after that 60th day until the day the decision was issued would be waived or stayed, and any interest owed to the taxpayer by virtue of any delay between that 60th day and the date of issuance of the decision would also be provided back to the taxpayer.
Right, so I don't think there's a change on the taxpayer prevailing side. That would already happen, so.
Chairman, this is Guy Childers for the department. Just for clarification, there are hearings where, and we are talking about the close of the hearing, because we do have hearings where the hearing has actually physically taken place, but there are closing or rebuttal briefs that'll be taking place after that. And those can take as long as 90 to 120 days after the actual date of the hearing. So we're talking about 60 days from the actual close of the record, close of at that moment. Is that what we're talking about?
I would think so from the time the matter stands submitted.
Mr. Chair, that's my understanding of this regulation. The existing regulation provides that it's after a hearing of a contested case. When there is a decision ready to be issued, the hearing officer shall prepare the findings of fact, conclusions of law, and the final decision on the issues presented in the hearing. I think if there's post-hearing briefing or anything going on, that would not be the point at which that 60-day time clock would commence.
Yeah, I would think that period tolls at that point.
Correct.
Commissioner Lippman, the intent is consistent with Commissioner Bursey's concerns that everything is done and so that the taxpayer cannot be motivated to try to delay a hearing to avoid interest, but everything is done. And I also agree with public comment that our ALJs are very busy and perhaps overburdened, but that shouldn't be the taxpayer's concern. The state should remedy that to the extent this becomes a financial burden.
And one more comment, the subsection 2 of the NAC 360.170 requires that the hearing officer render a decision, and the language says within 60 days after the date of the hearing. So it doesn't provide for any post-hearing briefing or any subsequent any subsequent actions that may delay the decision.
Commissioner Bursey, this is Commissioner Byram. I agree with that. And I think that at the end of the hearing, the administrative law judge generally sets forth a briefing schedule. And if briefs or reply briefs are not received in a timely manner, I think the hearing officer needs to just go forward with what they have received by the date they set forth. You know, the continued back and forth could be never ending if we were to change that. And if 60 days is not enough, or if we don't have enough personnel in the ALJ office, we probably need to address that as a state.
Commissioner Lippman, just to think out loud, I'm inclined to go with the department's response. I think trying to recraft this on the fly is probably not the way to go at this point. So I'm supporting the department's response. I do understand the NTA's concerns, but I think that this is something we should push to another date.
Right.
Okay.
I guess, Mr. Chairman, this is Commissioner Rutherford again. I mean, that's not for this hearing, but maybe a future hearing as an informational item from the department. Maybe we should have a discussion on staffing and where, you know, staffing is short and where it needs to be fixed. And, you know, what is our game plan to try to rectify that?
Agree. And it would be Commissioner Lippman, for the record, it would be very helpful to have the ALJ's input. And as others have said, the data, I bet the numbers could be very compelling.
Right.
Okay. Should we try a motion?
Commissioner Lippman moves to uphold the department's response to the NTA's request regarding NAC 360.170. But we appreciate very much the input.
Commissioner Bursey seconds.
Okay, I've got a motion and a second for the discussion. Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries unanimously. Okay, next item, please.
Thank you, Mr. Chair. Yvonne Navarez-Goodson for the record. Our next regulation on list number 3 is NAC 360.175. The existing regulation relates to the appeal of a decision of a hearing officer to the Nevada Tax Commission. The commission may modify, reverse, or affirm the decision of a hearing officer or remand it back to the hearing officer for further consideration. Also, it indicates that the commission must issue a final written decision in those contested matters. There's been a stakeholder request to require the commission to post all of its written decisions on its website. And the department's response to that request is to take no official position other than to note that the commission has previously declined to publish all decisions because its decisions do not constitute binding precedent for other taxpayers, and they are resolutions in contested cases with individualized facts. So with that, Mr. Chair, I do know that we probably have stakeholders present here in Carson City who may wish to comment, and we'll turn that over to the commission for their direction on that particular recommendation.
Okay, thank you. Comments?
Thank you, Mr. Chair. I'll kick it off. Josh Hicks with McDonald Carano. So this really came about because there is not a lot of case law or decisions from the commission that are helpful to tax views certain issues and decides them. It's difficult to know that without making a public records request. And it's important to note that that commission final decisions can be requested by a public records request. Confidential information, of course, is redacted. And of course, how binding those authorities are is subject to interpretation because they're respect to a particular taxpayer and they're based on a certain set of facts. Nonetheless, there is an obligation under the Taxpayers' Bill of Rights that taxpayers be treated with consistency and with uniformity. So when there is a decision made, particularly on on a question of law, for example, it can be very helpful to the public to know what that decision is so that they can guide their own tax planning and their own activities, knowing what that will be. I think anyone who's practiced in the tax area knows what I'm talking about when you say it's hard to find a lot of guidance. Oftentimes when you do find guidance, it's extremely dated. And this, I think, would be something helpful. So again, we are not in any way, shape, or form asking for anything confidential to be redacted. We'd probably be the first at the table saying we don't want confidential information being disclosed. But what we're trying to do is create the ability for the public to have a resource that they can go to pull decisions, look at them, and see if it's something that might help their own activities. Again, I don't think the taxpayer would be very successful if they came in and said that decision was binding on them. But I do think it would be helpful with respect to knowing how the commission views things in terms of the uniformity and consistency requirement of the Taxpayer Bill of Rights. So that's the basis for this decision, and that's why we made the request. Thank you.
Okay, thank you.
George Ritz, for the record, Commissioner Wren, with the Nevada Taxpayers Association. I just want to piggyback on what Josh just said real quick. The tax notes that the department puts out, the technical bulletins is kind of my go-to place besides the statutes. So if there was additional place to go for your decisions, that it would just be helpful for the taxpayers to make rational decisions or answer a question they may have. And that's all I have. Thank you.
Okay, thank you. Anybody on Zoom?
If there's anybody on Zoom that would like to make public comment, please dial *9. I do not see anybody on Zoom. Is there anybody in Las Vegas? No public comment in Las Vegas. Thank you.
Okay, thank you.
With that, Mr. Chair, if there would like to be a motion or any discussion by the commission on 360.175.
I would entertain a motion.
Well, Mr. Chairman, I'm not necessarily making a motion. Let me make a comment. I don't know that it'll move this matter along any, but I would agree with Mr. Hicks that in many years gone by, when I was more prevalent on tax matters, one thing that I would have liked to have seen was some sort of a repository. I'm not necessarily needing to know who the taxpayer is, but it's nice to know, you've got a regulation or a statute, this particular fact pattern, whether it's a sentence or two, concerned this particular regulation or this statute, the decision was X, with the understanding that there's no stare decisis on anything that the commission does, almost in a head note, searchable type fashion. But, I understand that to ever create something like that would probably be an additional staffing issue for the department, to basically, hire somebody as a research analyst or a couple of people as a research analyst to create that kind of a database for the public. But as somebody who as a lawyer that used to handle these types of tax matters, it would have been greatly appreciated.
Okay. Any other comments?
Commissioner Lippman, go ahead.
Commissioner Bursey, I would move to not amend section NAC 360.175.
Commissioner Lippman seconds the motion.
Okay, I have a motion and a second for the discussion. Seeing none.
Commissioner Lippman, just for the record, I am concerned about staffing and I'm trying to, in my own mind, think about what that would even look like on the website. I appreciate Commissioner Rotifer's thought process about having some research person put together a line or two. I think it would be very helpful. It reminds me of a private letter ruling, which
Right.
can't be cited as precedent, but yet as a tax lawyer, they're very helpful to review. So but it is a lot of potentially a lot of work to put together. And I do think we have staffing issues, but again, I apologize for thinking of kicking this can down the road a little bit. But as a law professor with a lot of law students out there that could use some tax research experience, this might be a great thing to do in the future if we could all come to a meeting of the minds about how it might look.
Commissioner Bursey, I think I need to modify my motion. I think the motion would be, I would move to not recommend for amendment section 360.175.
Okay, Commissioner Lippman, do you second that amendment?
Yes, so that was my understanding. We want to agree with the department. Well, the department's response was kind of agnostic. So, but believe the statute as is.
Okay, very good. All in favor, say aye.
Aye.
Opposed? Motion carries. Thank you. Next item, please.
Thank you, Mr. Chair. Yvonne Navarez Goodson for the record. Our next regulation on list number 3 is NEC 360.185. This existing regulation relates to rehearings or reconsiderations of the decisions of the Nevada Tax Commission by an aggrieved party. Failure of an aggrieved party to seek reconsideration does not affect the person's right to file a petition in the district court. Any decision of the commission on reconsideration is the final decision for purposes of judicial review. In light of this regulation, I also wanted to point out the provisions of NRS 360.395, which mandates that a taxpayer either 1, pay the amount of the determination, or 2, enter into a written payment plan with the department before seeking judicial review. Any later finding by a court that the commission's final order should be reduced or that the person does not owe any taxes requires the department to credit or refund the amount to the taxpayer. So with regard to this regulation, we've had a request from public stakeholders to add a new subsection to interpret the statutory mandate set forth in NRS 360.395 as to allow a taxpayer to seek judicial review without payment or a payment plan, but instead acknowledge the obligation to pay if the judicial review is unsuccessful. The department's response to this is to disagree, viewing that these are statutory requirements that are jurisdictional and rooted in case law, and the interpretation that prohibits a taxpayer from filing cases to enjoin the collection of a tax. Any such change, in our view, would require legislative amendment, and the commission should not interpret away its jurisdictional posture. And with that, Mr. Chair, again, I know that we do have members of the public here who might want to comment on this request to the commission. And given that this is a legal issue, we may also want to defer to our Attorney General if there are legal questions about it.
Okay, thank you.
Thank you, Mr. Chair. It's Josh Hicks and McDonald Carano. I'll make some preliminary comments on this. This request came about from, as you've heard, a longstanding really barrier to judicial review that taxpayers face in terms of paying the entire amount of any kind of disputed tax before going to court. And like I'd mentioned before, there's not a lot of Supreme Court precedent on tax issues that's out there already. And a lot of times when you look at what's actually out there, it's typically in the context of a refund or something where a taxpayer has already paid the tax because that's the way they get into court. So we certainly understand that you don't want taxpayers just rolling the dice on every single case and going to court. But there are certainly times where taxpayers may have a legitimate issue that they want to take to court, but they simply can't because the consequences or the filing fee to go to court is very significant. And this is a particularly acute problem for small businesses that I've found in my experience. A large business, if they think they need to go to court, that's not a problem. They can go, they can figure it out. But a small business that's facing, looking at a couple years of going to court, paying this money up front, it's a significant impact. It's a significant problem for them. So we have a statute, that talks about you either have to pay it or you have to enter into a written agreement. And our position is not to change that statute at all, but just to make sure there are some clarifications within that. One of which is that it should be clear that simply entering into a payment plan does not preclude somebody from going to seek judicial review. And I want to differentiate a payment plan from a settlement agreement. Those can be two very different things. A settlement agreement, oftentimes the parties are agreeing on a certain number. They're both weighing the costs and risks of litigation to come to an end. And there is a desire for finality in that process. But with respect to a payment plan itself, a taxpayer who enters into that, they put it into something they can afford, but they want to also seek judicial review, should not be precluded from doing that. So, and I think that is entirely consistent with NRS 360.395 1B, which allows judicial review upon entering into a written agreement. The second point that I think we're trying to make is that there are times where an issue of first impression will come up to the tax commission, or perhaps a constitutional issue. Issues that may well benefit everybody from having a judicial decision down the road to provide additional guidance. And in those kind of cases, we're also asking that the regulation be put in place and a policy be put in place that judicial review could be allowed upon the taxpayer agreeing to pay at a later date. And that also is allowed under the plain language of 360.395 1B. So keep in mind, 1B does not necessarily require a payment plan. It requires a written agreement to pay at a later date the amount of the determination. So I think that it would be helpful if this commission had some flexibility and authority in those issues of first impression to agree to a payment of a later date. The taxpayer would say, if I lose in court, I will pay. They'll be subject to interest. So that's the risk they take. But that still judicial review would be allowed on those kind of issues of first impression. So those are the two things we're trying to accomplish with this recommendation. I think they're entirely consistent with 360.395. They don't impact the jurisdictional piece of it. And they're just a way of applying that statute in a way that I think makes sense for a lot of taxpayers. Thank you for the opportunity to make those comments.
Okay, thank you. Anybody else in?
Tina, do we have anyone via Zoom?
Chairman Wren?
Oh,
yes.
If I may, this is David Pope. I just wanted to remind the commission that you do have a couple of cases pending where the statute is at issue. And so you may want to take that into consideration if you start asking questions. And I'm happy to try to answer questions in some limited capacity as well.
Okay.
Thank you.
Mr. Chairman, this is Commissioner Byram. I did want to ask for that some input because the department's response says that the statute would not allow this to happen, but I think Mr. Hicks explained it pretty clearly that it could, and with several pending cases that where they're not able to be heard because they had not prepaid, and that's a technical requirement in the statute. How would the proposal by the Taxpayers Association work if there is a statutory that, you know, statutes are in the way? Mr. Pope or whoever.
Okay, sorry, Commissioner Byram, I wasn't sure if you were asking me. So there, you know, I'll just reference, there's one of the statutes, NRS 372-670, starts by saying no injunction, writ of mandate, or other legal or equitable process may issue in any suit or proceeding in any court against a state, against any officer, to essentially enjoin the collection of the tax. And so from memory, the progression of the development of tax statutes across the states was that imposing statutes were developed, then anti-injunction statutes came along, those were challenged, and the court said, well, as long as you have refund statutes, you can have anti-injunction statutes. Now, this is from memory, this is pretty general, but that's my understanding. The reasoning for that is that the revenue is necessary for the survival and function of the state. And, you know, so to the extent that the association or taxpayers generally are proposing that no amount be paid, I think that's contrary to the policy of the statutory scheme. But maybe there's considerations, you know, to determine what amount. I think the department and the commission need to consider the risk, because if a case goes to district court, you're looking at probably a year, maybe another 3 years. If it goes to the Supreme Court, assets can be moved, people can go out of business. So maybe this is something, you know, better discussed at a later date in detail. But if that's helpful, those are my comments at this point.
Okay, and for clarification, again, everything in on list number 3, regardless of what we do today, would have to go through public hearing and be vetted a whole lot more than we can vet it today. Is that, I want to make sure everybody's on the same page there. That's correct, right?
Yes, Mr. Chair, that's correct.
Okay. Okay.
If there's any public comment on Zoom, please dial *9. And any public comment in Las Vegas? And no public comment.
This is Marianne Widener with the Clark County Assessor's Office. I just wanted to make a comment just because of the mention of some of the court cases that have gone forward. And we have had court cases that have, you know, the assessor doesn't deal with so much of the collection of the taxes, but we have had court cases that have gone up to the Supreme Court 3 separate times over a 10-year period. One court case, come back down to the state board, gone back up through district court up to the Supreme Court 3 different times, and it ended up dying on a technicality. But I'm just making the Nevada Tax Commission aware of the fact that we do have court cases that can extend over an extended period of time that may impact your decision as to whether you want to address this. Thank you.
Okay, thank you. Okay.
Mr. Chairman, this is Commissioner Byram, and
Yes.
I agree. I think that something could be done with this one, but I think that it's complicated, and I think we need to deal with it and all of the different types of taxpayers, types of appeals, how much risk we need to consider, and I think this would be better in a more to be more fully heard with some proposed language at a later time. And so I would move to decline the recommendation by the Taxpayers Association on the amendment to 360-185 at this time.
Commissioner Lippman seconds the motion.
Okay, I have a motion and a second for the discussion.
To
Seeing
the
none,
extent, Commissioner Lippman, to the extent we do consider this, I do think we need to think about the impact and on the demand on our court system and our ability to manage that. Thank you.
thank you. Okay, all in favor, say aye.
Aye.
Opposed? Motion carries. Thank you very much. Next item, please.
Thank you, Mr. Chair. Again, Yvonne Navarez Goodson for the record. Our next regulation on list number 3 is NAC 361.1177. This existing regulation governs the adoption by reference of various property appraisal publications and standards. There's been a recommendation by the Clark County Assessor's Office to take out references to specific publications as they may become outdated, or to just contact the department for the appropriate reference materials. The department's response is to recommend no changes at this time, just based on subsections 2 and 3 of the regulation, which govern modifications and notice of revisions for such publications, and to hold further discussions and workshops to make such changes. With that, Mr. Chair, I do believe we have the Clark County Assessor's Office present in Las Vegas if there's any comment. Otherwise, I don't believe we have any comment in Carson on this one.
Okay, Las Vegas.
Yes, Mary Ann Widener with the Clark County Assessor's Office. Our comment was only primarily about the dollar value that was placed on the price for the publications. We have no problem with the publications. We think they're very important for how we govern and make the decisions we make for appraising properties. It was just more about the dollar value. And I did recognize, as Yvonne had mentioned, that there's subsection 2 does say that it has to be vetted. There's also another NAC, and I don't recall it right offhand, that we had mentioned in the state board workshop that had a dollar value on something as well. So we just pointed that out, and we recognize that this may not be the right venue and there might need to be something further done, but just wanted to point it out. Thank you.
Okay, very good. Thank you very much.
Mr. Chairman, this is Commissioner Rodford. Is there a reason we list the dollar value in this regulation?
Mr. Chair, I may defer to Deputy Director Mitchell to respond to that.
Yes.
Thank you. Jeff Mitchell for the record. That's a great question. It is a little odd that they have a specific dollar amount mentioned, especially since that dollar amount can change because it's a third party there. And so I don't disagree with the assessor's recommendation that gets removed. I just think that there needs to be a little bit more work done within the workshops to modify it to make sure. So I think it's a great recommendation. I just don't know if we can do it with this amendment. If that makes sense.
I guess it does make sense, but I mean, just me reading this regulation and trying to put on my hat as a taxpayer, I don't know that it provides anything by putting a dollar amount in there that, of course, could change.
Jeff Mitchell for the record. I agree. So my disagreement was a very soft disagreement with moving this forward. If that's a pretty wish-washy statement from me, but I don't disagree that removing just the dollar amounts might be able to be accomplished. I was just a little nervous with subparagraphs 2 and 3 to make sure that it was done appropriately.
Well, Mr. Chairman, I mean, I don't, not to belabor the process, I'd be fine if the commission wanted to take these dollar figures out today and make that as part of the recommendation, or hold the entire regulation for a later discussion. I can go either way.
Mr. Chairman, this is Commissioner Byram. If we were to pull the dollar amounts out, we might as well pull out the dates because they reference the publication on that date being worth that. So it does need to be cleaned up a bit, but if we were to remove the dollar amount and the date and not go sideways with the sections that limit the change, that would be my recommendation as well.
Okay.
Commissioner Lippman, just to complicate things, of course, I'm wondering if the URLs are even accurate anymore or the addresses. So unfortunately, you start pulling that thread or you paint one room and all the other rooms need to be repainted as well. So I think probably needs to be cleaned up, and I'm not sure we should have this sort of information in a regulation that is subject to, as Jeff said, third-party changes at any point in time.
Sarah Glazner, for the record, you're right, Commissioner Littman. There is, we have spot checked a few, and yes, the URL on some are wrong. The addresses are correct. So it does, like you said, once you pull that string, we're going to have to fix it all. Or amend it all.
Chairman Wren?
Yes.
This is Mary Ann Widener with the Clark County Assessor's Office. I agree with everyone's comments. The only thing I am concerned about is sometimes the addition that is in here may be the last addition. We don't know what the latest and greatest addition. So then that would require some also modification to actually identify, what additions would be relevant. Some of this, appraisal theory hasn't changed. And so some of that's why those additions are still valid. And I know that that's what Commissioner Byram was pointing out. So again, if this becomes too complicated, we are totally okay with pushing this off to another time. Everything is functioning. There's not a problem. These are reference manuals that we still use. And so didn't want to open up a can of worms. Thank you.
Perfect.
Mr. Chairman, this is Commissioner Byram. I think that the Clark County Assessors raised a really good point that this regulation needs to be cleaned up. I think it's a little more extensive than what we want to do here for the governor's report. So I think we should bump it to have some regulatory workshops. And with that, I would move to decline making the change to this today.
Okay.
Commissioner Lippman seconds the motion, and the law is a seamless web.
Although I do appreciate Mr. Mitchell stating he had a soft position. That's something that's historic from a tax man.
Okay, I've got a motion and a second for the discussion. All in favor, say aye.
Aye.
Aye. Opposed? Motion carries unanimously. Next item, please.
Thank you, Mr. Chair. Our next regulation on list number 3 for your consideration is NAC 372.200. The existing regulation governs construction contractors and the taxability of tangible personal property purchased for the performance of a contract. We've had a stakeholder recommendation to suggest returning this regulation to a prior version of the regulation, or to include language that a construction contractor who uses a resale certificate to purchase materials does not automatically make the construction contractor a retailer, and that how the material is used is determinative for how it should be reported. The department does provide a response as follows, and I certainly have staff to defer to if there are additional questions, but with this brief department response. In Nevada, businesses serving in a sole capacity as a contractor are considered consumers of everything they purchase, including tools or materials, because these are not for resale. Rather, they are used as attachments to real property or used by the business and are not taxable for sales tax. Accordingly, contractors should generally be registered with the department for consumer use tax. If they are not a retailer, they should not provide a resale certificate to vendors. Alternatively, businesses that do not act solely as contractors, but also as retailers, repairmen, or manufacturers means that they can register as a retailer and obtain a sales tax permit. In this role, they use a resale certificate to indicate the possible retail sale transaction. Complications arise when these businesses serve in multiple roles and need to determine which role is being performed at a given time. For example, a retailer is not a consumer making retail sales of items in his or her inventory. A repairman can be both a retailer or a consumer, depending on whether the tangible personal property used and sold is substantial or insubstantial to the overall charge. And as a manufacturer, the materials purchased are generally incorporated into a finished product that retailers sell at wholesale to another business. And with that, Mr. Chair, I will turn it over to the commission for any questions. And if we do have questions, we have staff available to assist the commission in better understanding that.
Okay, thank you. Questions?
Is the gentleman who proposed it available?
We could check via Zoom. I don't believe that he is available in Carson or Las Vegas.
Who is it?
Mr. Voigt.
Oh. I do not see Mr. Voigt on Zoom. If you're on Zoom, please dial *9.
Mr. Voigt is not in the Las Vegas office either.
I don't see him on Zoom.
Sarah Glazer, for the record, I do not think he's attending today. He will be attending May 1st, but not to this one.
And for the commissioner's benefit, Mr. Voigt has provided both written public comment as well as the summary of his written public comment that we provided to you in the materials for this particular section of NAC.
Okay. Any other comments? I would entertain a motion then.
Mr. Chairman, this is Commissioner Byram. I would move to decline recommendation as it relates to NAC 372-200.
Thank you.
Commissioner Bursey seconds.
Thank you. I have a motion and a second. Any further discussion? Seeing none, all in favor say aye.
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 Opposed? Motion carries. Next item, please.
Thank you, Mr. Chair. Yvonne Navarez-Goodson again for the record. The next two provisions of NAC on list number 3, I'd like to combine. This is 372.605 and 372.607. These govern prepared food intended for immediate consumption and food sold at retail with eating utensils provided by the seller. Under the existing regulations, they interpret the term prepared food intended for immediate consumption, referencing definitions in NRS 360B.460, describing separate types of prepared food and excluding certain food. Existing regulations also interpret whether food sold at retail is exempt under NRS 360B.460 and NAC 372.605 and refers to food sold with eating utensils. The department's feedback with respect to the latter is that this section addresses the concept of food for human consumption that is not prepared food for immediate consumption when it considers the provision of utensils. The stakeholders' request in this instance is to return the language to pre-streamline sales and use tax agreement requirements, or alternatively to add the interpretation that the streamline, otherwise referred to as SUTA, does not relate to taxability. The regulations, according to the stakeholder, should provide an exhaustive list of the items to give guidance to the public, rather than allow the department to interpret which foods are taxable as prepared food for immediate consumption. The department's response generally would be to disagree with this recommendation, noting that Nevada is subject to the Streamline Agreement, which necessitated the changes to this regulation to achieve compliance when NRS 372 and 360B were amended and adopted. These definitions came from Streamline's library of definitions. Based on the new statutory requirements, the prepared food intended for immediate consumption is taxable. Given the breadth of foods that meet this definition, an exhaustive list would be unreasonable, and the regulation complies with the Streamline Agreement. The intention is that products prepared with intention of being consumed contemporaneously with the purchase, but does not require it to be immediately consumed. Mr. Chair, again, on this particular regulation, we do have department staff available to address any questions that the commission may have, but the requester is not available for comment today. However, the written comment has been provided to the commission in this instance.
Okay, thank you very much. Any questions?
This is Commissioner Byram. Mr. Chairman, are we as a commission precluded from making a change because we are within the streamlined sales tax organization and we can't make a change without becoming out of compliance? So we're constrained by that?
If I may, Mr. Chair, this is
Yes.
Yvonne Navarez Goodson for the record. I would like to defer to Tax Manager Guy Childers, as he is one of our representatives with Streamline. I think the response is that as long as an amendment would not be contrary to the provisions of Streamline. But again, I'd like to defer to Guy Childers for a better explanation.
Okay.
Guy Childers for the department. Chief Deputy Navarez Goodson is correct. And to Commissioner Byram's question, if we are substantially in compliance with the definitions contained in the SUDA, we need to be to put it bluntly, most of the regulations that we altered in order to come into full compliance are taken directly from the sales and use tax agreement for Streamline, word for word. And that basically keeps us without any doubt of compliance. And I can tell you right now that legislatively right now, we are having to correct an issue where we worded something in a bill in last session for sales tax holidays, and that caused us to be out of compliance, which we are right now. We are still out of compliance because that has not, the corrective bill for this session has not gone through. So yes, it is very imperative that we stay in compliance. One of the end results, if we are out of compliance, is there could be sanctions, and sanctions could be up to expulsion from the agreement as a member state. So I don't know if that answers Commissioner Byram's question or not.
Thank you for that. And I understand we are kind of limited on what we can do. There is a request or a thought that we could have some sort of a list, but the state pushes back that would not be an exhaustive list. But we could, if we were to put a list of the types of food expected to be included or not included, we could just say includes but not limited to, or for example, and not say that it's an exhaustive list. Is that a compromise that could be done?
Commissioner Geitzel, for the record again, as I wrote the response that's actually in your packet. And first of all, we need to be, that list is really actually, if you look at 372, 284, you look at 360B, 480 or 460, and you look at NAC 372, 605 and 607, that list is really not necessary. It's perfunctory. It would not serve really a good purpose. And you still have, even if you could create a list and say that it's not limited to, then you still have interpretation. Then you still have the department having to make decisions, because I'm sure, as you all know, the prior reg that Mr. Voigt is referring to actually isn't the NAC 372-605 that was previously to 2008. What he's referring to is NAC 372-580, which had a list in it that kind of gave you an idea of foods that would be for human consumption and not taxable as prepared food for immediate consumption. Problem is that reg was written in 1979. It's been repealed. It doesn't exist anymore. But My point is, since then, the types of food groups have grown prolifically, and trying to capture that, I think would be it would be exhaustive to do it, and I don't think it would be it would not be helpful. I don't think it would be helpful. Because the regs and the statutes that exist already really do take care of that if you read them together. And that's my comments on that.
Okay,
Thank you. That does answer my question. Thank you.
Mr. Chair, we also have Deputy Director Roebuck with a comment on that.
Okay.
Thank you. Jennifer Roebuck for the record. Just a quick comment on Streamline. Obviously, as Mr. Childress has explained, we do have to be delicate because any change that we make, we do need to make sure it is run contrary to our Streamline agreement. And just to kind of add a little context, when we first started with Streamline, actually collecting through our central service providers, we started in fiscal year 06 with less than $1 million in tax. Fiscal year 22, we're over $100 million. So this is something has been significant for the state of Nevada. So that's why we do need to be especially cautious. The other thing that I would like to just comment on, just as a thought, regulations are not easy to change. I mean, they're less difficult than statute, obviously. So I would just throw out there that maybe we stay away from too many examples in our regulation and statutes, only because times are changing so fast, products are changing so fast, faster than ever. I think, as a thought, we could just maybe limit it to our tax notes publication and our technical bulletins as we can get those going as a thought. And then, as specific situations come up, we always have the advisory opinion process and written request process to use as well as new products come into the industry. So that's just wanted to throw that out there.
Commissioner Lippman, for the record, I would also suggest that context matters. A donut coming from one spot in a certain context might be for immediate consumption, but in another context is not. So I think it's a list is asking for more questions. So I am ready to provide you with a motion, Chairman Wren, if that's what you're ready for.
Yes.
Thank you. So I move to uphold or not modify NAC 372.605 and NAC 372.607 for the reasons articulated, and to support the department's response.
Okay.
Commissioner Bursey seconds.
Okay, thank you. I have a motion and a second for the discussion. Seeing none, say aye.
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 Opposed? Motion carries unanimously. Thank you very much. Next item, please.
Thank you, Mr. Chair. Yvonne Navarez-Goodson for the record. Last but certainly not least on list number 3, not only is it the last in numerical order, but I think this is the regulation regarding which we've had the most stakeholder feedback. So it might be worthy of the Commission's willingness to hear both the stakeholders' input as well as the department's response. But this is in respect to NAC 372.938. Before I get into the summary, I'd also like to point out that we have our Chief Deputy Attorney General David Pope available only because this particular regulation is currently at issue in several pending cases before either our ALJs or upcoming before the Commission. We want to be delicate not to mention any particular case names as may be related, but also wanted to point out to the Commission that we do have this regulation at issue in several pending matters. But as far as an overview is concerned, this existing regulation defines leases as sales consistent with statutory requirements and imposes a sales tax on the lease or rental of tangible personal property upon the person who leases or rents the property from the retailer. The sales tax shall be measured by the gross lease or rental charges or the cost of that property to the retailer. Under the existing regulation, a retailer who elects to pay the tax measured by the gross lease or rental charges by this section is not required to pay the sales tax. As I mentioned, several public stakeholders have requested this amendment, to which some are present today to provide their comment, but I'd also like to provide the department's response through Deputy Director Roebuck and Tax Manager Guy Childers, who've put together an overview for your consideration, and then we can take comment from our stakeholders. So I'd like to turn it over to Deputy Director Roebuck, if I may.
Okay, thank you. Deputy Director Jennifer Roebuck for the record. First of all, just also wanted to thank Guy Childers, Tax Manager, for his help in putting this together. So of the proposals received by the department, NEC 372-938 subsection 3 was the most numerous. The proposals boiled down to allowing taxpayers to pay tax on the cost, making the election at any time, with applicable penalty and interest if paid after the due date. Some of the proposals asked to repeal the deemed election section altogether. As this is a significant change, my role is to explain some of the potential impacts of these proposals for your consideration. I've also got a revision proposal, which I hope will improve tax clarity and transparency in the rental industry. First, for context, in 2001, Nevada was provided authorization to enter into the Streamlined Sales and Use Tax Agreement, which was a lengthy process. As part of the agreement, Nevada was required to align its definitions, including retail sale. In 2003, legislature passed, which provided that retail sale means any sale, lease, or rental for any purpose other than resale, sublease, or subrent. In 2005, clarity was provided that the terms lease and sale did not apply to those existing on or before June 15, 2005. In 2008, Nevada became a full member of Streamlined. NAC 372-938 and other regulations were added in 2009 to clarify the tax treatment shift from rentals and leases as a consumption to a retail sale. In order to assist industry that was accustomed to paying the tax upfront on the cost, the election to pay, as long as it was timely, was provided in subsection 3. The bottom line was and is rentals and leases are retail sales and taxed as such. Nevada is not unique in its tax treatment of rentals and leases. In nearly every state with a sales tax, the tax is applied to the rental or lease stream. You can easily Google this, and in 2014, the department published one of its technical bulletins dedicated to this topic. Again, if a taxpayer does not make the election up front, the tax treatment defaults to imposition on the rental and lease stream retail sale pursuant to the law. This does not create a tax trap. Conversely, the election provides the option for those in the rental industry to choose to continue to exercise a business model as prior to 2005. Existing law requires that all tangible personal property purchased for rental and lease be subject to the sales tax on the lease and rental streams. However, tax paid timely on the cost satisfies that requirement. Some of the proposed revisions would remove the deadline of an election to pay sales or use tax upfront. In the event of discovery, usually in the case of audit, the net effect of such a revision is that the taxpayer could select the lesser of the two deficiencies. So with that, here are some of the department's concerns. The executive order requires review to determine whether the regulations may be streamlined, clarified, reduced, or otherwise improved to ensure those regulations provide for the general welfare of the state without unnecessarily inhibiting economic growth. In the spirit of this order, the revision would complicate adherence to the regulation rather than simplify. The proposed revisions would cause compliance inconsistencies. Defining and or following industry standard would add levels of complexity to taxpayer service and auditing for compliance. And determining whether a resale certificate was provided is overly burdensome for taxpayers and the department, entangling other retailers in an audit of their customers. Next, the proposed revisions would negatively impact the taxpayers in the rental industry who have adapted to file correctly. There is a perceived disadvantage where one business charges sales tax and another does not. A customer may favor renting from a business that does not charge sales tax over another business that does. The customer would have no way of knowing whether their selected rental was taxed on the original purchase. Next, the proposed revisions could enable tax avoidance strategies or loopholes. For example, a lessor purchases equipment without paying sales or use tax and does not charge sales tax on the lease stream. A taxpayer could wait until just prior to the total of the tax, penalty, and interest on the cost is about to surpass the total of the sales tax on the lease stream and then pay. Meanwhile, the state has been shorted the tax while the lessor waits it out. The proposed revisions are burdensome for taxpayers and the department's efforts to provide compliance assurance in a specific industry. And finally, Nevada's statute of limitation is 3 years from filing a return or 8 years for unfiled return periods. There are a few complexities that will arise if this subsection is repealed. To illustrate, we included some potential scenarios in the written response, but essentially there is a serious lack of clarity on the tax liability, particularly when a purchase of the property falls out of statute. The department does have a proposed revision to address a clarity concern. Currently, it's impossible for customers to reliably ascertain whether sales or use tax was paid by the lessor on tangible personal property. For example, on one rental, a customer might see the sales tax on an invoice, but on a rental of a similar item from a different retailer, the customer might see no sales tax at all. In any other retail sale, it's unlawful for a retailer to hold out that sales tax is absorbed by the retailer, and the tax must be stated separately from the sales price. Regulation does provide that taxpayers can post a notification that the sales tax is included in the sales price. So to provide transparency, let's consider requiring a notification to customers such as sales or use tax has been paid on the purchase of X. Sales tax is not due on the rental lease price. So any receipt, invoice, or rental or lease agreement that does not have a separate charge for sales tax would have that statement. Retailers that pay the sales or use tax up front on the cost should provide notice to explain the lack of sales tax on the rental lease stream. For all rentals and leases that were tax paid up front, the retailer must notify the customer with a statement of that fact. If the retailer does not provide the factual statement, then the sales tax would be due on the rental and lease stream. This approach provides an opportunity for informed choice for customers, and it provides tax transparency among businesses in the rental leasing industry.
Thank you, Mr. Chair. I believe we also have some stakeholders present in Carson who may like to.
Okay, before we go there, I apologize. I have a doctor's appointment that I need to leave for. Commissioner Bursey, can I pass the chair to you for this final item?
Yes, you may.
All right. My apologies, and I appreciate everybody's comments today, and we'll see everybody on the 1st.
Thank you, Mr. Chair.
All right, thank you.
Thank you, Mr. Chair.
Madam Chair Bursey, we have some stakeholders present here in Carson City who may like to offer some comment to the commission.
Sure, go ahead.
Thank you.
Madam Chair Bursey, George Ritz, for the record. So lately I've been spending some time at the legislature, and in a couple meetings, I heard that 90% of businesses in Nevada are small businesses. Currently, right now, there's 4 bills out there, 2 in the Assembly, 2 in the Senate, to assist small businesses. There isn't an issue of whether the rental or lease is taxable, but when the tax is due. The tax liability is discovered during an audit in most cases. This said, the Department of Taxation has an amazing audit team that discovered the tax liability in these situations. And the audit team that determines or discovers the tax liability should determine when the tax is paid, whether it's on the lease stream or if it was paid at the time of purchase. While the auditors are out conducting an audit and reviewing the journal entries of the taxpayer and seeing if tax was paid on the purchase price or if it was charged on the lease stream. The discovery is in the audit by the auditor and dictate how the tax should be applied. A few questions that audit should be questioning. One is intent. What was the intent of the taxpayer? Two, were they unjustly enriched? And three, was Nevada made whole? If the taxpayer made a purchase and never charged tax on the rental stream, the taxpayer wasn't unjustly enriched. The taxpayer's intent wasn't to charge tax on the rental or lease stream. And if the audit changes, the taxpayer has a purchase tax on the purchase, the state was made whole since there is no election to either pay the tax at the time of purchase or on the rental stream. So what I'm trying to say there in that scenario, let the auditors do their job because they're good at what they do. You got a great audit team and they're really good and competent auditors. If they go out there and determine that the taxpayer that's being audited never purchased, never paid tax on the purchase and never charged tax on the lease stream, then let that show in the audit. Let that evidence determine if tax should be paid on the purchase price instead of the lease stream. And that's why we're asking for this amendment. The other thing is too, based on the time of the purchase, in an audit, the taxpayers will be assessed P&I, reminding that interest is assessed at 9% per year. So even in today's market, inflation, that's a lot of penalties. That's an expense of, it's cheaper to go get a loan. P&I reflects the time value of the dollar during the time the state didn't have access to the funds. And again, I want to reiterate, the state was made whole in this scenario. If they didn't pay tax at the time of purchase, didn't charge tax on the lease stream, and then it was discovered in the audit, the auditor picked it up, they paid the tax at that point in time or was assessed and then paid penalty and interest, the state is made whole. Just as a reminder, again, most of this stuff, as you heard from Deputy Roebuck, this is discovered in an audit. The audit, we're talking going back at least 3 years, if they're reporting. The tax, the interest on it, on 3 years could be upwards around 30%, the 10% penalty of the assessed tax liability. I asked that the commission allow the audit team to determine how the election is assessed and not the regulation in the work of the auditor. Thank you.
Thank you, Mr. Risk. We appreciate your comments.
Thank you.
Madam Chair, I think we have additional comment as well.
Thank you.
Thank you, Madam Chair. Josh Hicks with McDonald Carano. Appreciate the opportunity to speak on this. I know there's a bit of substantive analysis in several letters from the Taxpayers Association and the Nevada Federation of Independent Businesses on the record. But I just wanted to provide maybe some more high level comments on this regulation and really how this issue came to be. You heard some comments earlier about some pending cases, and you'll actually hear some more today from my colleague, Mr. Paul Bancroft. But it shouldn't, I would hope the commission is not discouraged by the fact that there are some cases with an issue that deals with this regulation pending, because it's very common that pending issues lead to top of mind issues that should be thought about. And with respect to the governor's executive order and setting up this process, it made that a timely issue to consider. And of course, a regulation is prospective and not retroactive anyways. So I think it's important to seriously consider this issue and think about the impacts on taxpayers and think about whether it makes sense to make some changes to this regulation. With that said, there are at least 3 cases or 3 taxpayers that I know of. And like I said, Mr. Bancroft will get more into some specifics, but that were facing sizable deficiencies because they did not make the timely election that is required under the regulation. And of course, anytime, it's not unusual, we'll have everyone who has practiced tax law or defended the tax department knows there's a variety of cases at any given time on various issues. But to have 3 with the almost exact same problem, all resulting in issues because of a regulation at the exact same time is unusual. And that's what really brought it to the attention, I think, of the Taxpayers Association as well as something to be looked at that if one person's doing something wrong, that can happen. If multiple people are getting caught in the same thing, maybe we should be thinking about, is this a rule that's easy to comply with, or is this a rule that's difficult to comply with? And that's really the core of this issue. As you've heard with the regulation itself, it gives taxpayers a choice. A taxpayer, that is, who's engaged in the lease or rental of tangible goods. They can either pay sales and use, they can either pay tax on the acquisition cost, or they can pay it on the lease stream. And the way they make that choice is what is the issue that we have here. It's not necessarily a easy choice to make. It's almost made for you. If you don't report the tax on your first return after acquisition, you are deemed to have made the election to pay it on your lease stream. Now, if you're a taxpayer, particularly if you're a small business, I think we all know use tax is something that the taxpayers get tripped up on all the time. Years can go by, and then you find out you haven't been collecting tax on the lease stream because you just were not aware about it. And that creates a significant problem. That creates almost a situation where small businesses can be put out of business, really unbeknownst to them until they get into an audit. And obviously those businesses would have made the decision to pay on the acquisition had they been more sophisticated, or had they had the resources to use tax counsel or a CPA to do that. So what we're trying to do really is make that election a little more reasonable for taxpayers to take advantage of, rather than right off the bat, first return after acquisition. And that's the way the rule used to be. Then you heard some of that in Nevada. When the regulation was changed in 2009, it was switched to this faster deemed election. But we've always had some kind of election. So even after streamlined sales and use tax was put into place, we've still had the election. And the concern is just the short time frame to make this election, and that's why the association's supportive of the proposed amendment that the NFIB advanced, and that really allows taxpayers to make that election at a later date. Now, there's some concern about, is the state shorted on its taxes? The answer to that to me is no. That is why we have penalty and interest. That's in any case where a taxpayer doesn't pay. That's how the state is compensated on that. With respect to the idea that taxpayers are trying to game the system, I can tell you in my experience, these are small businesses that get caught up in this. The last thing they're thinking about, which is why they're in trouble in the first place, is a complicated tax issue. So we think that this is consistent with streamlined. It's consistent with what we've had. It's talking about letting people have a more reasonable period of time to make this election on what makes sense for them. And if it's on the acquisition cost, they're certainly going to owe penalty and interest if they are delinquent on paying that. But the state still gets tax, and the penalty and interest is still paid. Before stopping, I also just want to mention that I did have a chance to review the department's recommendation. And in my opinion, that recommendation makes it even harder on taxpayers than we have right now. Not only does it leave the deemed election on a short time period in place, but it also imposes this requirement to include a certain disclaimer on invoices. And the way I read it, even if you made the election timely, if you failed to provide that disclaimer, you're still paying on the lease charges. So I think it goes the exact opposite direction than what we're hoping for. It's making it even more taxpayer unfriendly. And really what we're just trying to find is a way that's reasonable for taxpayers to do this. I don't think there's anything wrong with giving a taxpayer a choice, if they're given a choice, to choose the least onerous tax burden. And that's certainly something that we would advance. So we would hope that you would take a good look at the NFIB's amendment, and we hope you would reject the proposed amendment put forth by the department. And with that, I appreciate the opportunity to make some comments.
Thank you, Mr. Hicks. We appreciate your comments.
Madam Chair, if I may interrupt briefly, this is Yvonne Navarez-Goodson for the record. I Without interrupting additional stakeholder input, I just wanted to ask whether you would indulge a comment from our legal counsel, Chief Deputy Attorney General David Pope, on a quick issue.
I'm glad you suggested that because I was going to ask him a question also. Mr. Pope?
Yes. David
Go
Pope
ahead.
for the record.
No, go ahead.
Oh, yeah, I'm not sure. I think I just wanted to caution the commissioners. It sounded like Mr. Hicks was saying that Mr. Bancroft may get into specifics about cases, and you may not want to allow specifics on cases in case those matters are going to come before you. And maybe Sophia, I don't know if you've got advice on that particular scenario, but they could hear specific facts from matters that will come before them in the future if someone gets into case specific facts and issues.
Is there additional comment from counsel? Sorry, Sophia?
Sophia Long, Senior Deputy Attorney General for the record. No, I just echo what Chief Pope has said. So just not to get into specifics.
Yeah, I guess you'd want to avoid a situation where you may have to recuse yourselves because you've already heard the facts of the case. I don't know if that's a potential outcome, but I think it is. And so that's my caution. Thank you. Thank you, Sophia.
And I would caution Mr. Bancroft when he makes his presentation that he abide by your advice and not get into the specifics of cases. My question was going to be to Mr. Pope, and I was holding it till later, but I'll ask it now. Considering that there are three cases pending at this point, I'm just wondering about the appropriateness or the timing of the commission stepping in and suggesting amendments to the regs. Oh.
I appreciate that question, and my advice will be conservative, and perhaps you consider pushing this off to a workshop or at some point in the future.
All right, and I'll leave it to the rest of the commissioners to chime in on that, but is it the pleasure of the commission to just go ahead with taxpayer input?
Madam Chair, I would like to hear the public input.
Okay. Who's up next? Is it Mr. Bancroft?
I'd be happy to speak. Can you hear me?
Yes.
Yes.
My name is Paul Bancroft. I'm with the firm of McDonald Carano. And as Mr. Hicks mentioned, 3 of our clients have run into a problem with the election under this regulation. I'll keep my comments very generic because this is this regulation presents a tax trap which could capture, could snare any taxpayer, particularly small businesses. The election, as it's been mentioned, is an election that's made on the first return that is due after the acquisition of equipment. This election, if you miss reporting it on that return, it is a deemed election to collect sales tax on the item. This presumes a knowledge and understanding of the use tax and its application. I think it's pretty generally known that many small businesses are less familiar with the use tax, and therefore they may miss that reporting of it on their first return after the acquisition of the equipment. Consequently, if they miss it, they're trapped. the only option available to them is the sales tax on the lease charges. I echo George Hertz's comments that that leaves an auditor in a bind. The auditor may look at this and say, yes, people in your situation, your type of activity would normally be accruing the use tax and paying the use tax on this, but that option is not available to you. It ties the auditor's hands. The election is also inconsistent. I think this is a point Mr. Hicks made. It's inconsistent with the legislature, the penalties they've already adopted. The legislature in adopting the sales and use tax anticipated that businesses might be late, that they might file a late return, and it identified penalties for those. So the remedy, if a taxpayer were to miss the election timeframe, the remedy should be to allow them to go back and pay the tax which would have been assessed and pay the appropriate penalties and interest that the legislature put in place. The other thing the legislature's done is it's adopted the Taxpayers' Bill of Rights, which among other things requires that taxpayers be treated with fairness, uniformity, consistency, and common sense. That in itself, directs us to look at, well, what are other companies offering a similar type of service doing? And if the other companies providing a similar type of service are accruing a use tax and not charging sales tax on the lease stream, then the taxpayer who's delinquent should be allowed to do the same thing. But again, that result is not available because the deemed election in NAC 372938. To make this fair, I don't think the tax commission should, in a regulation, identify which tax treatment is appropriate, because you've got multiple different applications to multiple different industries. It should be a question of fact, which is a point George Hertz was pointing to, that the auditor's in a position to look at it. You're in a position to look at, well, how are other people in the industry treating, addressing the tax in this situation? And that is the conclusion that you should be coming to then for any taxpayer who fails unwittingly to have made this deemed election. It's just a surprise and a shock to a small business to learn, a year after, the 2 years, 3 years, whatever, after their acquisition of equipment, that they made a deemed election they never knew they made.
Mr. Bancroft, are you about ready to wrap up?
Yes. So, I would encourage you to submit the proposed amendment proffered by the NFIB. I think it would go a long ways toward eliminating this tax trap and making it a more fair and just system. Thank you.
Thank you, Mr. Bancroft. Are there additional taxpayers who wish to input?
Would anybody on Zoom like to make public comment? Please dial *9. Anyone in Las Vegas? I don't see any public comment.
Thank you. Well, hearing from the stakeholders, are there commissioner questions of any of them or of the department?
Madam Chair, we may have one comment from Deputy Director Roebuck, if you will indulge that.
Yes.
Thank you.
Thank you. Jennifer Roebuck, for the record, just as a very quick point of clarification, I just wanted to comment on an auditor's role. An auditor's role is to examine the nature, the taxpayers' business activities compared to their books and compared to what has been reported to the department. They are to follow the law for consistency between taxpayers per the Taxpayer Bill of Rights, both for those who make errors and those who do not make errors. And my second quick point is that anyone is welcome to contact the department for their tax obligation information at no charge. And that's all I really had to clarify. Thank you.
Thank you, commissioners.
Commissioner Bursey, it's Commissioner Brown.
Could I have you attend to us again, please? Considering I have a note on my screen that says my internet connection is unstable, so if you can't hear me, please let me know. Mr. Pope, considering that we have the 3 cases that are pending, would you once again give us any advice on how to proceed on this, and then we'll take it from there?
Thank you, Acting Chair Bursey. So I would, I guess I wanted to say that before the law was that a lease was a use. And so the election was to report on a lease stream rather than pay on the purchase price. Now it's switched and a lease is a sale and the sales tax is due. And it may be worthwhile looking into whether the same amount of tax is paid, whether it's paid on a purchase price or paid on a lease stream, depending upon the rental life or useful life of the property and what's being paid. And other than that, I don't know, I guess, the timing of the specific cases to know when they're going to potentially be in front of the commission to give you a great answer in terms of whether you should proceed with this now or wait for those to come forward. I mean, there could be additional cases. I can't really say that this particular, the exact issue is at issue as well. Sounds like it, but I don't know for sure. And so what is the, does anyone have an understanding of the timeline with, so these are recommendations, and then when the recommendations go to the governor, then what happens next? There would be a workshop to actually pursue potential changes.
I'll weigh in, Madam Chair. This is Yvonne Navarez-Goodson for the record. It's my understanding at this time that upon submission of the report to the governor's office by May 1st, we could anticipate the review by the governor's office of those recommendations and receiving some feedback, at which time, if there were any approved to go forward for formal amendment or repeal, it would start the process that is set forth in NRS 233B. And as anyone who has operated in that type of regulation timeframe, there is a lengthy period of time between getting those regulations to the legislature, getting the regulation language back, posting that language for a workshop and another public hearing before the commission, and then ultimately getting that regulation, if it is adopted by the commission, to be adopted by the legislative commission. So it could be as far out as a year or more before any formal adoption or amendment to any regulation could take effect from this point forward.
Another thought is that, if the discussions are such that they're limited and there's no discussion that could be imputed somehow back to affecting one of the pending cases, then to the extent that a change would be prospective, then, you may be okay proceeding today.
Well, it sounds like it's going to be the pleasure of the commissioners. Is there a motion to go forward on, or comment or questions?
Madam Chair, this is Commissioner Byram.
Yes.
I am really intrigued by this issue, and I think some really good points have been raised, but I would be more comfortable tabling it for now and having some regulatory workshops where we could really fully develop this and develop an understanding on how to make this work fairly going forward. But that would be, my thought would be, I'm uncomfortable slamming something in that we're so far apart on what the proper language should be, how it would be treated, and what, but I think Mr. Bancroft, Mr. Hicks, they make very good points about it. So I would prefer to table it if it was up to me.
Commissioner Percy?
Yes, Commissioner Brown.
Thank you. I concur with Commissioner Byron.
Commissioner Brown, we're having a little difficulty hearing you. You're just cutting out a bit here and there. If you might try again with your comment.
Is this any better?
Yes, thank you.
I concur with Commissioner Byram's comments. I would just say that on list 3 that we've discussed today, I think numerous of the items on that list have some merit, and that they could be discussed by the commission and the department. But I share the concern that we're just rushing through these today because there's this opportunity or this window. And I would prefer to take these in more detail and spend the time and get it ready. So that would be my comment.
Commissioner Bursey, I have a motion if you're ready to entertain it, but I understand if others have comments.
I think you can make your motion, Commissioner, and we can comment afterwards.
Thank you. My motion is to leave NAC 372.938 unchanged and not adopt the recommendation at this point from the stakeholders or the department. I think at this point in time, we should leave it as is and the end.
Thank you. Is there a second?
Commissioner Roeder for second.
Thank you. So we have a motion and a second. Now is there further discussion?
Madam Chair, this is Commissioner Roeder. I'm intrigued by these comments that have been raised by Mr. Hicks and Mr. Bancroft, and I certainly would be receptive, but I would agree with Mr. Brown Commissioner Brown, that, we are in the process of trying to do something that's being mandated by the governor's office, and I understand what we have been asked to do, but some of these proposed regulatory changes are not something I think that we can whip through in 15 minutes or 30 minutes. I think they need more vetting and more in-depth discussion.
And Commissioner Lippman, just to weigh in, I thought that the department's recommendation on its face was attempting to clarify, but then hearing Mr. Hicks weigh in and voice his concerns, I thought those had merits as well. And so this just needs a lot of thought, the more minds, the better. And this is not the point in time to do that. We just don't have the capacity.
And this is acting Chair Bursey. I would agree, given the obvious feelings that have been expressed today and ideas, I don't think we're in the position to go ahead and recommend changing the law at this point. So I would agree with what's been expressed by the commissioners. Is there further comment? Okay, we have a motion and a second. Do we remember what the motion is? I think we do. All those in favor, please say aye.
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 Is there anyone opposed? I think it was unanimous. Thank you. All right. We're through list 3, is that right?
That is correct, Madam Chair. Yvonne Navarez Goodson for the record. I think there might just be, excuse me, 2 final cleanup matters. The first of which is whether any commissioners have any other additional provisions of these chapters that we haven't addressed that they would like to have included in the report. And then secondly, I would just remind the commission if they would make a motion to authorize department staff to prepare the report consistent with the decisions made today by the commission.
Going to the first question, are there any additional provisions that commissioners would like to put before the body today? Hearing none, do I have a motion to adopt the report?
Madam Chair, this is Commissioner Rotifer. I so move. And I'd also,
Second.
and Madam Chair, I'd also like to say, just for the record, I think that the department and their staff having a full-time job and taking on this task is yeoman's work, and I appreciate all the public comment too. This has been a productive and worthwhile process. It's probably long overdue.
It's been extremely educational from my viewpoint, and I thank everyone who participated in it. So we have a motion and a second. Is there any further discussion? All those in favor, please say aye.
Aye.
Anyone opposed? The motion passes unanimously. Anything else on our agenda that we need to attend to?
Madam Chair, I believe we have one more round of public comment, general public comment. And we do have public comment here in Carson City, Madam Chair.
Go ahead.
Thank you, Madam Chair. It's Josh Hicks with McDonald Carano. I just wanted to take the opportunity during public comment to thank the commission for hearing all our various comments. I wanted to thank the department and their staff for their professionalism going through this whole process. It's not too often that taxpayers get an opportunity to just come up and give a bunch of ideas that they think are worth considering. So I do hope that some of the issues you've heard are at least sparking some thoughts about ways to improve the system. I know this was a fast system with the executive order, but I think it's been worthwhile. I know it has on our end. It gave us a chance to go back and think about some of these issues and think about how to improve things. And that, like I said, that doesn't always happen. So we thank you for hearing us out. And again, thank you to the staff. Appreciate it.
Thanks for those comments, Mr. Hicks. Further additional public comment?
If there's any public comment on Zoom or the telephone, please dial *9. I don't see any on the telephone. Any public comment in Las Vegas?
None here.
No public comment.
Is there anything further? When's our next meeting?
Thank you, Madam Chair. There's nothing further from the department. Our next meeting is May 1st, 2023.
Thank you. Well, is it time to adjourn? Thank you, everyone, for listening and all of the input. I think this was a Herculean effort by the department, and I really appreciate everyone's response to it and the willingness to provide information to us. Thank you. Thanks, everybody. Thank you.
I hope the department has the weekend off.
We have to prepare the report.
Sarah Glasner for sure. Thank you.